This is a message from the RNLI and Her Majesty's Coast Guard. Beach lifeguards can't be everywhere this summer, so they can't always protect your family, but you can. So keep an eye on your loved ones. Avoid taking risks in the sea. Don't use inflatables. In an emergency, dial 999 for the Coast Guard. Get more advice at rnli.org/beach2020. Thank you.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel, Le Shuttle, a safer way to France and beyond.
Capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
Live from the Bloomberg Interactive Brokers Studios, this is Bloomberg Daybreak for Thursday, July 9th, 2020. Coming up this hour.
Daily coronavirus infections in the U.S. hit a fresh high.
Cases in California hit a record while Texas reports its highest deaths yet.
Calls for a national mask mandate gather steam from Chicago to Miami.
And the White House starts a push to reopen schools across the country.
Governor Cuomo says he will make a decision next month on reopening schools. Plus, the Supreme Court rules today about President Trump's taxes. I'm Michael Barr. More ahead.
I'm John Stashauer in sports. The Nets have added an NBA veteran, and the Ivy League is the first college conference to cancel all sports in the fall.
That's all straight ahead on Bloomberg Daybreak. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good morning, I'm Karen Moscow.
And I'm Nathan Hager. Bloomberg Daybreak is brought to you by Witham, a forward-thinking advisory and accounting firm helping clients to be in a position of strength in the new reality of business. Learn about their innovative solutions by visiting Witham.com.
And U.S. futures, they're mixed with S&P futures moving lower. It is 6:01 on Wall Street. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 3 points. Dow futures down 67 and NASDAQ futures higher up 44. The DAX in Germany's up 1.25%. 10-year Treasury up 3/32, yield 0.65%. Yield on the 2-year 0.15%. NYMEX crude oil's down 0.5% or 20 cents at $40.69 a barrel. COMEX gold is up 0.1% or $2.10 at $18.22.80 an ounce. Nathan.
Karen, coronavirus infections in the U.S. have hit another daily record. California is reporting a new high in cases as Governor Gavin Newsom walks a fine line between alarm and reassurance. Here with more is Ed Baxter from our Bloomberg 960 newsroom in San Francisco.
Governor Newsom on one hand talks about the dramatic increase in the number of cases, but then says the state is well prepared and we will get through this.
We will. There's no question in my mind about that. The question is when, and that determines basis on the determination of how we conduct ourselves, how we behave.
And this, as the state reports, the biggest daily jump since the pandemic began. As alarming, though, is the 14-day positivity rate climbing to 7.1% from 6.8%. In San Francisco, I'm Ed Baxter, Bloomberg Daybreak.
All right, Ed, thank you. In Florida, Miami-Dade County reports its highest level of hospitalization since April. The mayor of Miami is calling for a national mandate on masks ahead of President Trump's visit to the state tomorrow. Bloomberg's Denise Pellegrini reports.
Mayor Francis Suarez calls wearing a mask a low-cost, high-yield way to deal with COVID-19.
It doesn't damage anyone's business, and it could significantly improve the circumstances. It's a no-brainer.
Suarez, who is a Republican, says we can't just keep shutting down and reopening the economy, and he wants a long-term strategy. Denise Pellegrini, Bloomberg Daybreak.
Thanks, Denise. Suarez isn't alone in pushing for a national mandate on masks. Illinois Governor J.B. Pritzker says it might be the most important measure to save lives.
We need a national masking mandate. We instituted ours in Illinois on May 1st, one of the first in the nation, and it aligns with our most significant downward shifts in our infection rate.
In testimony to the House Homeland Security Committee, Governor Pritzker called for a stronger national response to the pandemic.
Meantime, in Texas, we're seeing a second straight day of record deaths from the virus, and that has Houston Mayor Sylvester Turner canceling the state's Republican convention.
This convention is not moving forward, and it's because of the public health risk that it poses.
Houston's mayor is also pushing back against proposals to reopen schools in August, saying it's premature for those discussions.
Well, the Trump administration is pushing for classes to reopen nationwide.
We hope every school in America is able to open this fall.
Vice President Mike Pence was joined by Education Secretary Betsy DeVos at a coronavirus task force briefing focused on restarting face-to-face education.
Ultimately, it's not a matter of if schools should reopen. It's simply a matter of how. They must fully open, and they must be fully operational.
The push sets up a potential fight between federal and local authorities, some of whom are planning only part-time in-person classes this fall.
Meantime, a top health official in Tulsa, Oklahoma, says President Trump's campaign rally in the city likely contributed to a spike in cases. Bloomberg's John Tucker joins us live with the details. John, good morning.
And Karen, Tulsa County accounts for about a quarter of Oklahoma's nearly 18,000 infections. Daily cases just eclipsed the county's one-week average. And the Tulsa Health Director, Bruce Dart, says events in the past few weeks likely contributed to that. He's referring to the June 20th rally with an estimated 6,200 people gathered indoors, often without masks. The crowd estimate from Tulsa's fire department would make it the largest indoor U.S. event since March. The president plans to hold another rally Saturday inside an airplane hangar in New Hampshire. John Tucker, Bloomberg Daybreak.
Thanks, John. There are more than 120 coronavirus vaccines currently in the works, but the timeline for most remains cloudy. Merck is among the companies working on a shot. CEO Ken Frazier sat down for a conversation with David Rubenstein on Leadership Live, heard weekly on Bloomberg TV. He cautions against hopes for a vaccine in the coming months.
The fastest vaccine ever developed was our mumps vaccine, and that took 4 years. So now we know that the urgency of the situation is going to cause us to try to move quickly, but never, ever at the expense of safety.
With so many shots in the works, experts say we could end up with several vaccines. The most optimistic estimates call for the first to be ready in 6 months.
Coming up today, we get the latest reading on the economic fallout from the virus. Economists predict another 1.3 million Americans filed unemployment claims last week. And here with more is Bloomberg's Vinny Del Giudice.
Jobless claims have been running above 1 million since mid-March, peaking at 6.9 million at the end of that month. Bloomberg Economics says new virus cases pose a threat to the fragile recovery in the labor market and is warning of new job cuts in services such as leisure and hospitality. Vinny Del Giudice, Bloomberg Daybreak.
Thanks, Vinny. Jobless claims in New Jersey are running above 1 million, with 30% of the state's workforce filing claims since March. Later today, we discuss the slump and New Jersey's response to the pandemic with Governor Phil Murphy. Tune in for that conversation at 5 p.m. Wall Street time on Bloomberg Radio and Television.
S&P futures down a point. Dow futures down 47. NASDAQ futures up 47. The British pound at 1.2656 against the dollar. The euro 1.1332. And the yen is at 107.30. And straight ahead, we have the latest world and national news. And this is Bloomberg.
Okay, Karen, thank you. It is 6:07 on Wall Street, and now with more on what's going on around the world, here's Michael Barr.
Thank you very much, Nathan. New York Governor Andrew Cuomo says the decision on whether schools will reopen for in-person learning in September will be made by the state during the first week of August. Cuomo said the federal government has no authority on school reopenings. He made his comments in response to President Donald Trump calling for schools to reopen. Meanwhile, New York Mayor Bill de Blasio said the city's 1.1 million students will have a blended learning schedule in order to maintain fewer students in a school building at any given time.
Here's the deal. For the vast majority of kids in the vast majority of schools, you'll be going to school, to the classroom, either 2 days a week or 3 days a week, depending on the week.
De Blasio says the other days students will be taught remotely. Connecticut's governor says they plan on reopening schools on time. Governor Ned Lamont spoke with Bloomberg's David Weston.
Because we have an infection rate less than 1%, because we're meeting all the metrics, we are planning to open our schools on time in late August, September, a normal school day, so there's not a lot of back and forth, some days on, some days off. I think that's better for the kids and certainly for the employers and getting our economy going again. They'd like to know what the work schedule is of the people who are working for them.
New Jersey's Motor Vehicles Agency was overwhelmed for the second straight day after reopening Tuesday. It will extend its hours, but Governor Phil Murphy warned that long lines will continue for a bit. The agency's offices, closed since March 15th, were swamped by customers seeking driver's licenses, the tests, automobile registrations, and renewals. The Supreme Court is expected to rule on whether Congress and the Manhattan District Attorney can see President Donald Trump's taxes and other financial records after the president has fought hard to keep private. The case, which could be resolved today, tests the balance of power between the White House and Congress, as well as Trump's claim that he can be investigated while he holds office. 2 days after a judge ordered the controversial Dakota Access oil pipeline to shut by early August, its owner, Energy Transfer, is vowing to schedule shipments and has made no moves to take it offline. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
Thanks, Michael. 6:09 on Wall Street. Time for the Burden Accountants and Advisors Sports Report. Here's John Stashower.
All right, Nathan. The Ivy League has led the way once again. It was the Ancient Eight that was the first to cancel games. The Ivy scrapped its postseason basketball tournaments back on March 10th, the day before the NBA stopped play, and soon after everyone did. Now the Ivy is the first to cancel fall sports, including football. Players will be allowed to practice. No word on whether games will instead be played in the spring. Last night in Orlando, the return of Major League Soccer, and before the first game, over 100 African-American players took a knee and raised their fists. NYCFC plays tonight against Philadelphia. The depleted Nets are headed to Orlando for the NBA restart. 4 Nets aren't playing, so Brooklyn in need of bodies. The signed 40-year-old Jamal Crawford, who's played for 8 teams in his 19-year career. A new coach for the Devils, Lindy Ruff, currently an assistant with the Rangers. He coached Buffalo and Dallas for over 20 years. An update on Mets summer camp from new manager Luis Rojas.
Once we go through screening, we go through the distancing on full field protocols that we've been doing here. I think we get on the field and we have fun, and so that challenge over seeing it, anticipating it from the beginning, I think it's actually going really well.
At Angels camp, two-way player Shohei Ohtani, who hasn't pitched in 2 years, took the mound and had 8 walks. Novak Djokovic has recovered from having coronavirus. He says he's unsure if he'll play the U.S. Open in New York in early September. John Stashower, Bloomberg Sports. Nathan?
And John, another company is cutting Washington Redskins merchandise from its site. Amazon now joins Walmart, Target, and Nike in casting out a team name that contains a racial slur. According to a letter reviewed by Bloomberg, the e-commerce giant told sellers they had 48 hours to review and remove Redskins products. Activists have lobbied for years for the Washington football team to change its name. Its owner, Dan Snyder, said last week that it's under review. S&P futures lower by 1.5. Dow futures down 49 points. NASDAQ futures a gain of almost 47 points. This is Bloomberg.
Hey, y'all. Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's BABBEL.com.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Here's to you that learned with homeschooling that your kids are smarter than you. Here's to all the self-taught banana bread bakers. And to you that rock that very questionable homemade haircut. Costa is giving £3 to everyone that missed us as much as we missed you. Get your £3 in the Costa app today and enjoy a coffee, cake, or snack on us. Come on, you earned it. Terms and conditions apply. For details, visit costa.co.uk/terms.
Honda. We're not a car company. We're more of a listening company. And now our ears have brought our attention to where people feel most comfortable, the lounge. So we asked ourselves, what could Honda do to innovate in this space? Well, how about more space? Calm and uncluttered, with modern yet retro styling, and built-in screens compatible with your games console. It's the most comfortable lounge you've ever driven. Introducing the new Honda E, our small electric city car. Honda. The power of dreams.
Television. Here's Taylor Riggs.
Facebook releasing the results of independent civil rights audit, which concluded the recent decisions by the social network have resulted in, quote, serious setbacks for civil rights. This coming just a day after a tense call between Facebook executives and advocacy groups. Here to discuss is Vanita Gupta, President and CEO of the Leadership Conference on Civil and Human Rights. Vanita was on yesterday's call between Facebook leadership and civil rights groups. Talk to me about the audit. What stood out to you most?
Well, I think the audit really amplified what the civil rights organizations have been really seriously concerned about with the platform, about how the platform has been weaponized for voter suppression, for problems around online hate, and that the company itself has not done enough on these issues yet to be able to give us sufficient comfort. In a lot of ways, the civil rights audit has been going on for the last 2 years. Many of our organizations have been very involved with it since its inception. There's been some progress made. The audit and the external pressure we've brought has resulted in Facebook changing unlawful and discriminatory ad targeting that was happening on the platform.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow. And S&P futures are now little change this morning. Dow futures down 42 and NASDAQ futures up 49. This ahead of some U.S. jobs data that'll offer some key insights into the recovery of the world's biggest economy amid rising coronavirus infection rates. The DAX in Germany is higher, up 1.3%. The 10-year Treasury up 3/32, yield 0.65%. Yield on the 2-year, 0.15%. NYMEX crude oil is down 0.3% or 12 cents at $40.78 a barrel. COMEX gold is up 0.2% or $2.80 at $18.2340 an ounce. The euro 1.1329 against the dollar. British pound 1.2654 and the yen 107.30. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, the nation has reached a grim milestone. The number of COVID-19 infections in the country has reached more than 3 million cases. More than 60,000 positive diagnoses were confirmed yesterday alone. The Supreme Court is expected to rule on whether Congress and the Manhattan District Attorney can see President Trump's taxes and other financial records that the president has fought hard to keep private. Presumptive Democratic nominee Joe Biden will call for a moderate approach toward reviving the U.S. economy if elected president. Biden will deliver his economic speech today in Pennsylvania. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
Okay, Michael, thank you. It's 6:19 on Wall Street, live from the Bloomberg Interactive Brokers Studios. This is Bloomberg Daybreak. As we await the latest read on where we are in the current economic recovery, we welcome in Lee Farage, head of macro strategy at State Street. Good to have you with us this morning as we await those always hotly anticipated weekly jobless claims figures. The median estimate is another 1.3 million filings last week. What could that mean? What will the weekly jobless claims mean for the recovery going forward, do you think?
Well, I mean, I think, and thank you for having me. I mean, I think a lot of people are now looking back at the jobless claims, after 2 months of very good payrolls numbers. The key here is, what do the renewed sort of round of lockdowns, pauses in reopenings mean for the data going forward? I mean, for me, I think there's a very real risk that the data for July, when we get it, disappoints. So jobless claims is going to be a good indicator of that. I say payrolls itself was beaten for the last 2 months, but that was sort of the best it got in terms of the virus in the U.S. And certainly the reference week for the June payrolls was right at the bottom of the daily virus numbers before they started to accelerate. So jobless claims, I think, we disappointed last week, largely overlooked because it came out at the same time as the payrolls, but this week's going to be watched much more closely, I think.
Do you think it's going to put more pressure on lawmakers to pass further fiscal stimulus?
Well, the pressure should be there already, quite honestly. I mean, I think what's happened is, with the better-than-expected data, the payrolls I mentioned, ISM data, retail sales, it seems to be some of the emphasis, some of the pressure on them to pass the further fiscal stimulus seems to have been eased. That is a mistake. Much of the CARES Act, it runs out at the end of July. The $600 extra unemployment insurance runs out. The PPP, the loans to businesses, can be converted in the next few weeks. And all of this means those temporary measures put in place by the CARES Act that was so important to limit the economic impact on the consumer and on small businesses, they expire. So without a new one, we face this fiscal cliff. And I think, regardless of what the data is saying, the lawmakers need to look at that and say, we need to do more. We need to tide the economy over even further.
Are you seeing in any high-frequency data evidence of an impact on some of the rollbacks that we've already started to see in some of the coronavirus hotspots like Texas and Florida?
Yeah, absolutely. We're seeing it in, if you look at OpenTable, they have some very good daily data on dining in restaurants, and those have definitely, really over the last 3 weeks, that's really started to come back down across all of the southern states, you say Texas, Florida, California as well, and others. And the U.S. as a whole, if you look at the weekly change in that's turned negative again. Having got to sort of minus 60% year on year, it's now started declining again. Also, home-based data, which shows business openings, hours worked, For weekly workers, that's rolled over the last few weeks as well. So certainly in the high-frequency data, you're seeing the impact of these rollbacks. And it's not just that, don't forget. Even if we don't go back into lockdown, even if governors, et cetera, don't actually put in place rollbacks, people will vote with their feet. If they're nervous, if cases are rising around them, they'll stay in more than they would have done. They won't go to that restaurant. They won't go and socialize perhaps as they would if the numbers were falling. They'll vote on their own without actually being told to go to lockdown, and that in itself can roll back the recovery anyway.
Could that lead to the possibility that we see another return of haven demand for the dollar?
It's possible. I mean, certainly against the high beta currencies in EM, I do worry about sort of the high beta currencies in EM. I think what's trickier is against the euro and the yen. There, I think the dollar's entering into more of a medium-term downtrend. Now, that's not to say if we don't get some big risk-off events, you won't see that rush into the dollar. You will. But I think it's going to be limited against the euro and the yen. I think that the interest rate support for the dollar is gone. What's becoming clear is the U.S. is behind Europe when it comes to tackling the virus. So that should mean that Europe's economy gets on a stronger footing before the U.S., and that's not reflected in consensus growth forecasts yet. So you combine that with Europe's current account surplus, the U.S. deficit, the lack of interest rate support now, all of that points to a medium-term uptrend in euro-dollar for me. But if you're looking against the dollar against EM or against high beta, against Aussie, Kiwi, CAD, there I still think the dollar safe haven element will serve it in good stead. I think that, Q3 is going to be very tricky for markets, given where we are in terms of valuations, given what's happening with the virus, given the fiscal issues that you mentioned as well, and given the impending election. That's going to get ever closer as the weeks go on. Q3 is going to be very, very tricky for investors, and that actually could help the dollar against those high beta currencies, even if the U.S. is the sort of epicenter of it.
Yeah, certainly a lot of uncertainties ahead. Thanks for offering some clarity for us this morning, Lee. Good having you with us. Lee Farage, head of macro at State Street. Before we get those weekly jobless claims figures in just about 2 hours, futures are mixed. S&P futures down a point, Dow futures down 46. NASDAQ futures should say higher by 48 points. You're listening to Bloomberg Daybreak.
This is a Bloomberg Money Minute. Stock futures are narrowly mixed as we await the latest unemployment claims numbers due before Wall Street's opening bell. Stocks rose yesterday, the broader market up about 1% with technology powering the gains. Dow jumped 177, the S&P was up 25. The NASDAQ rose 149 points to another new record high. A new survey underscores how the pandemic has hit household finances in the U.S. Bankrate says that among U.S. adults, almost half have seen a negative impact on their income because of the coronavirus. Almost 60% of those that saw a drop in income said they expected it would take longer than 3 months to recover financially. Bed Bath & Beyond plans to close 200 stores over the next 2 years in a bid to cut costs. The retailer would not say how many jobs will be lost. Bed Bath & Beyond operates more than 950 of its namesake stores in the U.S. Gina Cervetti, Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car, comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel Le Shuttle, a safer way to France and beyond.
At Halfords, we're here to get you where you want to be. Why not book an MOT to get you safely back on the road? With over 600,000 carried out every year at 350 garages, you can always count on our experts. And get back to visiting those you've missed the most.
Hi, Mom.
From a safe distance, of course. From MOTs to battery replacements and tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
Listening has always taught us a lot at Honda. And lately, we've been listening to your thumbs. Because thumbs can do everything now. The world is at their thumb tips. So now, the My Honda Plus app lets the thumb take control of your car too. Even when you're not inside the new Honda E, your thumb can find where you parked, set the temperature before you get in, check how much the battery is charged, and schedule charging for when electricity is cheapest. The new Honda E and My Honda Plus app. Oh, a thumbs up. Honda, the power of dreams.
As shops open up again, how do we all stay safe? Fontaine runs a craft store.
We've made the shop COVID safe. If you can't keep 2 meters apart, make sure it's 1 meter with extra precautions. Know the number of customers allowed in at any one time. Use the hand sanitizer at the entrance and use contactless payments. I'm loving serving customers again, but please, to keep us open, we've all got to keep to the guidelines.
Stay alert. Control the virus. Save lives.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
It is 6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow. We are just about 3 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. S&P futures are lower this morning after coronavirus infections in the U.S. hit another daily record. California is reporting a new high in cases as Governor Gavin Newsom urges residents to wear face coverings.
We're seeing hospitalization rates grow. It's because people are not wearing their masks. People are not, for many different reasons and many different circumstances, practicing the physical distancing.
The governor of Illinois is also pushing for more masks. J.B. Pritzker says a national mandate could be the most important measure to save lives.
We instituted ours in Illinois on May 1st, one of the first in the nation, and it aligns with our most significant downward shifts in our infection rate.
Meantime, in Texas, we're seeing a second straight day of record deaths from the virus, and that has Houston Mayor Sylvester Turner pushing back against plans to reopen schools.
Do everything we can to get this virus under control today, and then we can see where we will be in August or September.
Well, still, the Trump administration is pushing for classes to restart nationwide. Education Secretary Betsy DeVos addressed the issue at a coronavirus task force briefing.
Ultimately, it's not a matter of if schools should reopen. It's simply a matter of how. They must fully open, and they must be fully operational.
The push sets up a fight between federal and local authorities, some of whom are planning only part-time in-person classes this fall.
Meantime, a top health official in Tulsa, Oklahoma, says President Trump's campaign rally in the city likely contributed to a spike in cases. And Bloomberg's John Tucker joins us live with the details. John, good morning.
And Karen, the Tulsa Health Department says data and timing suggest a relationship between the increase in Tulsa County infections and the rally on June 20th. The president held the event despite pleas from local authorities to delay it. The county reported a jump in cases this week that eclipsed its one-week average. The president plans another rally this weekend in New Hampshire. John Tucker, Bloomberg Daybreak.
All right, John, thanks. Coming up today, we get the latest reading on the economic fallout from the virus. Economists predict another 1.3 million Americans filed for unemployment last week. Look out for that data at 8:30 a.m. Wall Street time.
S&P futures down 1.5 points this morning. Dow futures down 52. NASDAQ futures up 48. The 10-year Treasury up 3/32. Yield 0.65%. Yield on the 2-year 0.15%. NYMEX crude oil is down 0.3% or 13 cents at $40.77 a barrel. And COMEX gold little change at $18.20.50 an ounce. The euro 1.1329 against the dollar. And the yen 107.32. Straight ahead, we have the latest world and national news. And this is Bloomberg.
All right, Karen, thank you. It is 6:33 on Wall Street. Let's bring in Michael Barr once again for a check of what's going on around the world. Good morning, Michael.
Good morning, Nathan. New York Governor Andrew Cuomo says the decision on whether schools will reopen for in-person learning in September will be made by the state during the first week of August. Cuomo says the federal government has no authority on school reopenings. He made his comments in response to President Trump calling for schools to reopen and threatened to withhold funding if they don't. New York Mayor Bill de Blasio says he anticipates a blended learning program for the city's 1.1 million students when the nation's largest public school system reopens.
Blended learning simply means at some points in the week, you're learning in person in the classroom. At other points in the week, you're learning remotely. And we all know remote learning is not perfect, but we've also seen a lot of kids benefit greatly from it during these last months. And we know we'll be able to do it even better in the months ahead.
De Blasio said masks and other PPE will be mandatory. Connecticut plans to reopen schools on time. Governor Ned Lamont, speaking to Bloomberg's David Weston, says while the state wants to reopen for business, out of an abundance of caution, they aren't opening bars yet.
We've got about 95% of our economy open right now. But when it came to bars and nightclubs and big entertainment venues, I listened to governors from Florida and Texas and the such saying they regret that they did open their bars when they did. And that was an opportunity for some super spreading to go on. We don't want that to happen. So in abundance of caution, we're not going to open them yet.
A Black Lives Matter mural will be painted today right in front of Trump Tower in Manhattan. President Trump tweeted earlier the mural would denigrate the luxury of Fifth Avenue. The Supreme Court is set to rule this morning on two big cases concerning President Trump's tax returns. Bloomberg's June Grasso has more.
The Supreme Court will issue the last opinions of the term today. Those include two of the most controversial cases of the term over subpoenas for President Trump's financial records from Congress and a New York prosecutor. Trump argues that lawmakers are trying to engage in law enforcement beyond Congress's constitutional powers and contends presidents should have absolute immunity from state criminal investigations while in office. Both cases could have profound long-term ramifications, potentially giving presidents sweeping new protections from investigations while in office. June Grasso, Bloomberg Daybreak.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
Thanks, Michael. We're coming to 6:36 on Wall Street. Time for the Burden Accountants and Advisors Sports Report. Here's John Stashauer.
All right, Nathan. The Ivy League, citing university restrictions on travel and visitors, has canceled all fall sports. They say it's about policies, not finances. Of course, the Ivy League doesn't have as much at stake financially as these major conferences who've got huge TV contracts that are used to support all the other sports on campus. But it was the Ivy that led the way back in March. It was the first conference to cancel its postseason basketball tournaments. At Stanford, the athletic department looking at a $25 million deficit for the fiscal year. So the school has eliminated 11 of its 36 teams effective at the end of this upcoming academic year. The Baltimore Ravens figured out that if they do allow fans in, but with social distancing restrictions, they'd have about 14,000 in a 71,000-seat stadium. The Mets' J.D. Davis on what to expect without fans.
We got to find a way a little bit. It's going to be different. It's going to be, obviously everybody's going to feel a little bit isolated, especially, having our own teammates being in the stands, 6 to 10 feet apart. But you know what? We love playing this game. We enjoy being around each other. So I don't think it's going to be that much of a concern.
Well, no fans at Citi Field, but there will be cardboard cutouts with pictures of Mets season ticket holders. The Jersey Devils season is over. When they return next season, their coach will be Lindy Ruff. He's been an NHL head coach for 20 years, currently an assistant with the Rangers. 40-year-old Jamal Crawford was unemployed with so many Brooklyn Nets not part of the NBA restart. The Nets have signed Crawford. This will be his 9th team. John Stashower, Bloomberg Sports. Nathan.
Thank you, John. It's 6:37 on Wall Street. And coming up shortly, we get earnings from Walgreens. Let's get a preview now from Bloomberg's Larry Kofsky.
The key questions for the drugstore chain will be the profitability of its U.S. business, the resilience of its international pharmacy segment, and the pace of recovery into 2021. Bloomberg Intelligence forecasts Walgreens' U.S. pharmacy sales will mimic those previously reported by CVS, with same-store sales up 17.5% in March, 1.5% in April, and a 1.1% decline in May. Larry Kofsky, Bloomberg Daybreak.
Thanks, Larry. 6:38 on Wall Street.
The following commentary is from Bloomberg Opinion.
Suppressing the Republican vote? I'm Jonathan Bernstein, a columnist for Bloomberg Opinion. Experts have been wondering whether Donald Trump is harming Republican turnout, and now Republican campaign operatives are worried too. It's pretty simple. Trump's unrelenting and unfounded assault on the integrity of voting by mail may frighten Republican voters who otherwise might use that method, perhaps enough for them to skip the election altogether. In reality, normal vote by mail favors neither party, nor is the possibility of anyone getting away with widespread fraud a serious concern. My guess is that Republicans won't lose a significant number of votes from Trump's scare stories, but I can't blame party professionals for being concerned. The sad part is how pointless all of this is. There's no reason to expect that Trump's opposition to vote by mail will help him or his party. Overall, Trump is making it a little bit harder for a lot of people to vote, scaring some of his own supporters, and possibly depressing Republican turnout. Oh, and he's weakening American democracy by undermining everyone's trust in the integrity of elections. I'm Jonathan Bernstein. For more opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
You can hear Bloomberg Opinion commentaries every weekday at this time. Terminal customers can read more at OPIN Go. 6:39 on Wall Street. Time now for the Bloomberg Green Report. Here's Jeff Bellinger.
Climate advocates have been calling for lower meat consumption for years. Now it appears the coronavirus pandemic will usher in the biggest global decline in meat eating in decades. Data from the United Nations indicate per capita consumption worldwide will fall to the lowest level in 9 years. The predicted 3% decline from last year would be the biggest annual drop since at least 2000. Forecasters don't expect U.S. consumption to return to pre-pandemic levels until after 2025. Meat consumption is on climate advocates' radar because by some measures, agriculture accounts for more greenhouse gas emissions than transport, and livestock production is a big part of that. Meat and dairy alone are said to be responsible for as much as 18% of the global greenhouse gas emissions caused by humans. It remains to be seen, of course, whether consumers who get used to having less meat during the pandemic will make permanent changes in their diets. Jeff Bellinger, Bloomberg Radio.
All right, Jeff, thanks. S&P futures down 3, Dow futures down 67 points, NASDAQ futures are up 37 points. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
This is a Bloomberg Pursuit.
The big Volkswagen event is now on. If you're after a new Volkswagen, we offer to pay your first 3 months finance payments and an additional £500 to £1,000 contribution to your deposit at 3.8% APR representative. Hello, sir. Do any take your fancy?
Well, yes, a new Golf or T-Cross. A Tiguan. No, Passat. Oh, I need to sit down.
Here, have a seat.
The big Volkswagen event. With every type of car on offer, you may have trouble choosing. With Solutions Personal Contract Plan until 12th of July excludes e-Golf at participating retailers only. Minimum 46 months to receive 3 months finance payments. Indemnities may be required. Volkswagen Finance. Contact your local retailer to book an appointment.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel, Le Shuttle, a safer way to France and beyond.
At Halfords, we're here to get you where you want to be. Why not get road ready with a free car check worth £15 at all our stores and garages? With 25,000 weekly slots available at 700 locations, you can count on us to get you safely back on the road. Or even back beside the seaside. From MOTs to tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
Short on time? Don't worry. You can still get your cook on with Asda. Get 3 Asda ready meals for just £5.50. Like our beef lasagna or our tomato and mozzarella panette bake. Hang up your oven gloves. We've got dinner covered. Asda. Save money, live better. Selected stores and lines, subject to availability. Meals 400 grams, £2.10 each.
Financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Hospitals are hitting capacity in parts of America, battling surges in coronavirus.
ICU beds are running short in Arizona. There's only about 145 free left in the state. The ICU at one Southern California hospital has now hit its capacity. Florida reporting nearly 10,000 new cases Wednesday. 42 hospitals in the state have no ICU beds free. And Jacksonville, the new site for the Republican National Convention, is now a hotspot. Now, the White House Coronavirus Task Force is urging states states with surging cases to pause and roll back to phase 1. And they're now trying to reach Americans on masking up in a new way. At the White House, I'm Whitney Wild reporting.
Mystery out of South Korea. The mayor of the capital, Seoul, has been reported missing. Police officers said they're looking for Mayor Park Woon-soon. His daughter called police to say that her father left a will-like message before leaving their home earlier today. I'm John Trout.
It's a new disease making an unprecedented impact.
Job losses were widespread.
It is a stunningly historic moment.
Your best strategy?
Is this a market that's accepted reality?
Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures fluctuating ahead of the U.S. jobs data that'll offer key insight into the recovery of the world's biggest economy amid rising coronavirus infection rates. We check the markets every 15 minutes throughout the trading day on Bloomberg, with S&P futures down 4 points. Dow futures down 75. NASDAQ futures higher, up 36. The DAX in Germany is up 1.1%. 10-year Treasury up 4/30 seconds, yield 0.65%. Yield on the 2-year 0.15%. NYMEX crude oil is down 0.3% or 12 cents at $40.78 a barrel. COMEX gold is down 0.25% or $4.20 at $18.1640 an ounce. The euro 1.1326 against the dollar. British pound 1.2640 and the yen 107.38. And we are watching for that weekly report on initial jobless claims out at 8:30 Wall Street time. And that's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, a grim milestone for the nation as the number of confirmed COVID-19 cases crossed 3 million. Now some states are warning their hospitals are under an unprecedented strain and could hit capacity. The Supreme Court is set to rule this morning on 2 big cases concerning President Trump. Trump has been trying to keep his tax returns and other financial information from being released to prosecutors in New York, as well as congressional investigators. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
All right, Michael, thank you. We are live from the Bloomberg Interactive Brokers Studios. We're at 6:48 on Wall Street. Time now to check what's going on in D.C. Some of the top stories from the nation's capital. President Trump and Mexico's leader seal an unlikely partnership during a White House visit. Joe Biden plans to lay out a moderate approach to the economy in a speech today. And Alexander Vindman, the Ukraine expert who testified in the House impeachment inquiry, is retiring from the military, citing a campaign of bullying spurred by the president. Also making news, the Supreme Court saves perhaps its most politically charged case of the term for last. For more, we bring in Bloomberg U.S. politics editor Kathleen Hunter. And Michael mentioned it, of course, Kate, the subpoena case involving President Trump's financial records. Clear political implications here just 4 months away from the election.
That's right. And I think that, there's really a pair of cases here, one that stems from a grand jury investigation in Manhattan and the other that stems from the congressional subpoenas that have been issued by 4 different congressional committees in the U.S. House. And so I think that really the key issue here is how the justices rule in these cases and, what the implications of that are in terms of whether or not the public gets to see more of Trump's financial records, particularly his tax returns ahead of the election.
Well, the decision itself wouldn't decide that, whether we get to see the records, whether they get publicized?
In a technical sense, no. What it likely would decide is, again, in the case of the congressional subpoenas, whether Congress has access to those records. And then, but in all likelihood, Democrats have talked about the need for those to become publicly available. So I think the time span between when they would get a hold of them and when the public would see them would be very short. In the grand jury case in Manhattan, a lot of it, that's a little bit more complicated, because I think how it would work is that grand jury testimony and documents typically remain under seal unless or until there's some kind of an indictment. And so in that case, it might be a bit longer or not at all until the public would see the record.
What do you see the political impact of this decision being, no matter which way it turns out?
Well, I think that, it's going to be the next step in sort of this battle between Congress, specifically congressional Democrats, and the White House over the scope of the president's power to keep his personal financial information secret, and not just this president, but any president. And so I think that this will be the type of case that no matter how it goes, students in, high schools across the country will be learning about for years to come.
And that decision we're expecting could come down as soon as 10 a.m. Wall Street time. We'll have the full details for you here on Bloomberg Radio. In the meantime, we're also watching for this important speech coming up later today from Democratic presumptive nominee Joe Biden. And it's on the one of the few issues that he's lagging the president on, reviving the economy.
Yeah, and I think that what we're seeing strategically here from Biden, we're expecting him to lay out in a more specific way than he has thus far some of his economic proposals, specifically his proposals for getting the U.S. economy back up and running in the post-coronavirus era. And I think we're expecting him to focus a lot on issues, on proposals that would spur manufacturing and innovation. And so I think that is something to watch closely. But sort of the key takeaway here is that Biden, in terms of those proposals, is tacking a bit more to the center than some of his other challengers. He's incorporating some ideas from people like Elizabeth Warren, but not making those as focused on clean energy, for instance, as those on the left side of the party might have preferred. And so I think that'll be a dynamic to watch. He's obviously trying to appeal to Republican and independent voters, but the question is whether, those on the left side of the party are left feeling kind of unenthused.
And you wonder whether he's also trying to appeal to sort of populist voters that went along with President Trump 4 years ago.
Absolutely. And I think that is a demographic that he has the potential to do well with, given his background and his traditional appeal to blue-collar voters. And I think that, by focusing particularly on manufacturing, that is certainly making a pitch to those voters and trying to get them in his camp at a time when, approval of Trump's handling of the economy is on a downward slope.
All right. Bloomberg U.S. Politics Editor Kathleen Hunter, thank you as always. And you can read much more about these stories on Bloomberg.com or on the Bloomberg Terminal. And as always, you can follow all the latest on Bloomberg Radio in Washington. Just tune in to Bloomberg 99.1 and 105.7 FM HD2 in the nation's capital. Karen?
All right, Nathan, thank you. It is 6:53 on Wall Street. It's time for the Bloomberg Small Business Report with John Tucker. John, good morning.
Hi, Karen. Well, today we're speaking with Amanda Freeman. She's a health and fitness guru with two small businesses, SLT Workout Studios and Stretched Wellness Center in New York City. Amanda, I understand you just opened your second Stretch location in March, just right before the pandemic hold. That must have been a short stint. Are the doors now open again?
Stretched was able to open in New York City on Monday, and Stretched in Westchester. So we have a Stretched in Rye Ridge Shopping Center in Rybrook. That was actually able to open last week. We do have a few locations that can't open for classes, but can open for one-on-one, for some private training.
Now, do you find that your clients are willing to come back, or have they expressed fears about possible safety concerns?
It definitely is a mixed bag. We have clients who were eager to come in even before, to be honest, it was legal, and we had to turn them away because we obviously wanted to comply with state regulations. And then you have clients who aren't planning to come back probably till 2021.
Well, given all that, what's in store for the future for your businesses?
I think the key to the future is getting through the next 6 months. And I say I have two trains of thought going. There's how to survive, and then there's how to thrive. There's making sure that your business survives, and the key to that is conserving your cash and spending money wisely. And then there's thriving. Everyone says when times are tough, that's when opportunity abounds. And so the key is also putting ourselves in the position to thrive after this. What are the new opportunities? And, we're doing our best to keep track of expenses and maximize revenues. We've actually upgraded our equipment in a lot of the studios, so we've actually been able to sell old equipment to clients who are desperate to do the workout at home. And so that's actually been helpful just to generate some extra revenue to keep us going.
All right, Amanda, thanks. Amanda Freeman, owner of SLT and Stretched. Best of luck. And here on Bloomberg Radio, we're going to continue to bring you stories of small businesses trying to survive during the pandemic every day at this time. I'm John Tucker, and that is your Bloomberg Small Business Report. Karen.
All right, John, thank you. It is coming up to 6:56 on Wall Street. It's time for the Bloomberg NJIT STEM Report, brought to you by New Jersey Institute of Technology, ranked in the top 2% nationally for alumni mid-career earnings and number one for student upward economic mobility. Learn more at njit.edu. Now here's what's making news in science, technology, engineering, and math. Microsoft said it has new ways to make video conferencing more interactive and easier to figure out who's talking, or at least who's trying to. New features for the company's Teams software include one where participants are arranged side by side in white chairs seated in auditorium-style tiers. The company also developed a touchscreen display as a companion to a computer that can be used with Teams to access calendars, messages, and calls. Elon Musk predicts Tesla may crack the full autonomy puzzle this year. Musk told a conference in Shanghai that the electric car maker is close to developing the first 100% driverless car. The pandemic has both strengthened the case for robot drivers by making social distance essential and also shuttered labs and factories where the technology is being refined. And weather is becoming an important business in baseball. A company named Weather Applied Metrics is developing graphics to show weather's effect on the flight of balls for games at Wrigley Field in Chicago. The company says the technology will help the Cubs better position outfielders during home games. One of the biggest keys to Weather Applied Metrics modeling is computational fluid dynamics, which uses software to help analyze the flow of gas or liquids, or how flowing gas or liquids affects objects. And that's the Bloomberg NJIT STEM Report. S&P futures are down 5 points this morning. Dow futures down 90. NASDAQ futures remain higher, up 28, and the 10-year Treasury up 4/30 seconds, yield 0.64%. And Bloomberg Surveillance is straight ahead with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Did somebody say just eat?
Me, get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. Justeat.
Somebody say just eat.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen.
24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
The economy's not ready to be taken off of the ventilator here.
It's got to be the real economy that performs. Otherwise, none of these companies are going to be able to make it through to 2021.
The COVID virus and survival economics has blinded a lot of investors about what are the global tensions going on. And right now, the biggest global tension is the war between China and U.S. for sort of global positioning.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning, good morning. This It's Bloomberg Surveillance with equity futures negative. We're live on Bloomberg TV and radio alongside Tom Keene. Together with Lisa Bravitz, I'm Jonathan Ferro. Tom Keene, in 90 minutes' time, jobless claims in America, speaking to the pain in the labour market. And later, the former Vice President Joe Biden going to Pennsylvania to tell us why he's best placed to deliver the recovery this country needs.
John Farrell, the unemployment rate published in Scranton, Pennsylvania, always a tough coal mining economy there. Scranton, Pennsylvania at 15%, but you know it's much higher. And that key weekly indication, John, of jobless claims, 1.4, 1.3, maybe it's a good number, 1.1 million. We're nowhere near normal. And that speech will directly address this American labor economy.
Tom, it might get better, but it is not normal, and the numbers will still be ugly. Lisa, despite the sequential month-on-month improvement we've seen, we expect to see some elevated jobless claims again in around about 90 minutes.
And I think one of the main things people are looking at is the continuing claims, which are expected to tick a little bit lower, a good thing, but not that much lower, still near 19 million continuing claims. We're going to get those numbers at 8:30 a.m. A lot of people parsing the churn that you've been talking about, John, under that in terms of people getting re-laid off after getting rehired. I'm also watching at 1 p.m. The U.S. is selling $19 billion of 30-year bonds. Yesterday's auction of 10-year notes came with a record low yield of 0.65%. Interesting to see whether the demand will be there for the even longer dated bonds, even amid a deepening deficit. And then, as you were talking about, Joe Biden, former vice president, Democratic candidate, heading to his childhood home near Scranton, Pennsylvania. Interesting that he's taking a more moderate approach than some more left-wing Democrats are calling for, John. Interesting that this is coming at a time when he's trying to present himself as an alternative to President Trump, really taking this election to a referendum on President Trump's tenure rather than necessarily on a more progressive platform, John.
And the president trying to frame him as a Trojan horse for the radical left. I'm sure that will be the campaign structure for the months to come. Down in Washington, D.C., we'll catch up with Kevin Cirilli a little bit later this morning. We begin the program, though, by talking about this market. We can bring in Rob Waldner of Invesco. Rob, you've made it pretty clear. You think it's time to move to a more cautious risk stance on risky assets. I'll start with a short one. Why?
Well, John, thanks for having me this morning. What's driving markets here is really policy, right? And I'll give you a few statistics. We have, we talked about treasuries just a moment ago. Real yields in the treasury market are very low. So if you look at real yields, they've continued to decline. We have 5-year real yields of minus 100 basis points. Real 10-year yields minus 80 basis points. We have a Fed that continues to be active in the market, which is the reason why we've gotten this big bounce off of the bottom. And if you look at what happened in June, it becomes very, very clear that is what's driving things. So in June, we saw investment grade, which we know that the Fed is buying, continue to rally. Investment grade spreads tightened by about 24 basis points or so in June. High yield did not rally as much. Spreads tightened much less. And bank loans kind of went sideways in June, and the reason for that is that IG is very closely tied to Fed policy, as the Fed is actually buying. So our mantra has been buy what the central banks are buying, buy what the central banks are supporting, because the fundamentals themselves, underlying fundamentals at Z's, are not that positive.
Rob, Dan Kasov of BNP Paribas was lights out in the last hour talking about, nominal yields can stay where they are, folks, the visible interest rate that we see. And yet with rising inflation, those real yields could drive ever, ever lower. I have trouble believing that's a stable process. Will that be a stable process, or do you look for bond price volatility?
Well, Tom, the Fed, I think, is trying to make sure that's as stable a process as possible. Treasury volatility, so take the MOVE index, for instance, which is a measure of Treasury volatility, is at its lows. So the Fed, I think, is with their forward guidance And what their policy going forward will be to try and maintain that stability in the short end of the market, at least, so that you can have these real yields continue to decline. Obviously, there's a breaking point where they may lose control, but that will be well in the future in our view. So they will continue to be able to control the level of nominal rates to some extent. And if inflation expectations rise, which they have been recently is priced in the market, that means real yields go down.
Rob, what does a cautious stance mean at a time when there is discretion in markets, where you have the best quality assets with extremely high prices and the riskiest assets, the ones where you see companies closest to default, priced as such? How are you cautious in this environment?
So what we would advocate is, own what the Fed is buying, own what the central banks are buying. So in Europe, that is corporate bonds. In the U.S. here, it is IG. It is mortgages, because those assets, will be supported. The central banks are driving that. We're a little bit more cautious on assets that are more dependent upon the economic recovery. So the economic recovery clearly bottomed. I think some good news in our view is that we bottomed a little bit, less down in the United States in terms of the economy. It didn't dip quite as much as we were fearing. But this reopening process is in train, but it is not clear to us at all how this reopening process is going to go, especially given the viral pickup that we've seen in some states recently.
Rob, Lisa touches on something really, really important now. Everybody is crowding into the same trades. You're not the first, you won't be the last to come on this program and talk about following the Fed, going into U.S. investment grade. Do we need to think about redefining what is considered safe in this market? Well,
I'm sure that when I came on the program the last time, I would have said exactly that, which is buy what the Fed is buying. And, the fact is that in June, that worked. In June, that worked. We think probably in July, that'll continue to work. Redefining what is safe, that is a fundamental problem for the market here, John, because, the safe asset now has very, very little yield to it. So as we think about building portfolios, and I think this is a portfolio construction question, really, right? But with such a low rate of yield for the risk-free asset, we need to think about other assets that we can use to support that. And again, investment-grade bonds, spreads are 140 over right now. Investment-grade bonds where the risk of imminent default is not there. The volatility comes in spread, and the Fed is in managing that volatility. That seems like a pretty safe asset to us.
Rob, where's the unsafe asset? I mean, the real question here is, I get the idea of IG, but where do I not want to be in fixed income?
I think the things that you might want to be that require, so rather than say don't want to be there, where you really have to do your fundamental work is in assets that are more directly tied to specific sectors of the economy. So we know, for instance, the high yield default rate has picked up. We're running about 3.5%, I think, now in high yield defaults. That's not a big number, but there are idiosyncratic issues. We know the defaults have picked up in energy and a couple of other sectors. So what we would say, Tom, is those things that are tied more directly to the economic outcomes, you need to do your homework on.
John, I find this conversation so interesting because, to your point that you were talking about earlier, a lot of people are following the Fed. Initially, it was trying to front run the Fed. Now it's don't fight the Fed and follow the Fed. And you're seeing this in flows incoming into the biggest investment grade corporate ETF. I just want to give you this nugget. There has been $1.2 billion put into this fund in the past week alone, with another $202 million put overnight. This trend has not gone away. And it does raise a question, John. At what point has the Fed fully been priced in, and are they going to be unwilling to continue to backstop credit markets? And how does that rearrange what we are going to see going forward?
Lisa, it's an important question, and I think Rob's addressing the portfolio construction component of that question. I think it's really important, Rob. In the next drawdown, in the next downturn, what's going to give me that downside protection in my portfolio with 10-year Treasury yields just stuck between 60 to 70 basis points on a 10-year?
Well, you make a great point, Jonathan, which is that there's obviously much less downside for yields in portfolios right now. So you have to be a little bit more sophisticated in how you build your portfolio. And again, investment grade is a good way to think about adding some safety. But the traditional way of using treasuries as your risk-free asset, to your point, is 100% valid, which is there's much less downside available in yields right now, so much less underlying protection, if you like.
Rob Waldner, always appreciate your time, sir. Our best to the team over at Invesco. Rob Waldner there of Invesco Advisors. Tom, there's a real problem here, and that's grappling and dealing with two shocks. The first shock is all at once up front, is the shutdown. The second shock is the persistent water torture of an economy operating below capacity for an extended period of time. And that's what we're wrestling with right now.
Yeah, I thought it started with a Goldman Sachs research note of, say, 10 days ago or so, John, but there's a massive mystery here about summed economic growth or aggregate demand within the United States into the third quarter. And, John, I would think within days we're going to start to hear the experts try to frame out Q4, which to me is a complete total mystery.
A lifetime away. Never mind Q4. Let's get to the end of Q3, shall we, Tom Keene? And somewhere close to the election this November. We'll talk about the upcoming election and an upcoming speech from the former Vice President Joe Biden on the economy in Scranton, Pennsylvania. We'll catch up with Kevin Cirilli down in Washington, D.C. in just a moment. In your equity market, down 5 on the S&P, negative a little more than 0.1%. Alongside Tom Keene, together with Lisa Abramovitz, I'm Jonathan Ferro. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Now with the latest news from New York City and around the world, here's Michael Barr.
Thank you very much, Tom. A grim milestone for the nation as the number of confirmed COVID-19 cases crossed 3 million. The White House coronavirus response coordinator encouraged younger Americans to protect older family members from the coronavirus. Dr. Deborah Birx.
We are worried now that as cases spread, that it's getting to the older parents and the grandparents. And I call on, again, every multi-generational household, get tested and protect those in the household.
Birx also called for people to wear masks. The Supreme Court is expected to rule today on whether Congress and the Manhattan District Attorney can see President Trump's taxes and other financial records that the president has fought hard to keep private. Faced with an order to report to prison next week, longtime Republican operative Roger Stone begged President Trump for either a pardon or commutation of his criminal sentence. Meanwhile, Attorney General William Barr spoke to ABC about Stone's 40-month sentence, originally recommended during his trial at 7 to 9 years.
I think the prosecution was righteous, and I think the sentence that the judge ultimately gave was fair.
Presumptive Democratic nominee Joe Biden unveils his economic plan this afternoon in Scranton, Pennsylvania. In a speech, or in the Dunmore area, rather, Biden plans to show how he'll keep the country to rebound and regrow the economy following the impacts of COVID-19. Biden will follow a domestic manufacturing and innovation strategy plan that the campaign says will create 5 million new jobs in addition to the jobs lost due to the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
President of the Jewish Communal Fund, Zoya Raines, and her husband, Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up-to-date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Influential conversations.
At Halfords, we're here to get you where you want to be. Why not book an MOT to get you safely back on the road? With over 600,000 carried out every year at 350 garages, you can always count on our experts. And get back to visiting those you've missed the most. Hi, Mum. From a safe distance, of course. From MOTs to battery replacements and tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
London. Toolstation are here to help get your job safely started and finished. With over 60 branches within the M25. All open with social distancing and contactless click and collect from 5 minutes. And with 20,000 top trade quality products to choose from. Order online now for collection in London branches and get £5 off when you spend over £30 with the code LON530. So, get your job started at toolstation.com. Terms and conditions apply.
Get ready for the University of Bedfordshire. We've got all you need to make ambition become reality, to make lifelong friendships, to make contacts in your chosen industry, to make a name for yourself, to make it. In fact, we've got everything except your application. So get it in, sit back and relax. Wait, actually, check out our generous scholarships and bursaries for support at every step at beds.ac.uk. Okay, now you can relax.
I think the world has seen the true colors of the Chinese Communist Party, and I am convinced more than ever that the free peoples of the world will come to understand the threat that's presented.
Secretary Mike Pompeo taking up a prominent position inside the administration as a China hawk. How will the former Vice President Joe Biden position himself a little bit later in his speech in Scranton, Pennsylvania? From New York City this morning. Good morning to you all. Alongside Tom Keene, together with Lisa Bravitz, I'm Jonathan Ferro, live on Bloomberg Radio and TV. In your equity market right now, Tom, down just 3-4 points on the S&P, off by a little more than 0.1%. Politics, front and center, Tom, the economy, and the former Vice President. Top of the pile for me later today.
It's going to be really, really interesting to see, and we are so advantaged here at Bloomberg Surveillance to have somebody that really understands the tapestry that Mr. Biden will try to set in Scranton, Pennsylvania. His parents did not work for Dunder Mifflin, of course, the iconic paper company and the TV show The Office, but Kevin Cirilli knows the fabric of northeastern Pennsylvania and Scranton, Pennsylvania, because he lived it growing up just south. Kevin Cirilli, our chief political correspondent this morning. Kevin, why is the president selected, the vice president, why is the vice president selected Scranton for this presidential speech?
Well, from a practical standpoint, it's socially distant, and he's able to get there from Philadelphia, where the campaign is headquartered, given the dynamics of the virus. But from a theatrical optics standpoint, this is the working class type of community that the vice president wants to win over. Remember, Trump won Pennsylvania for the first time since a Republican's ever done it since 1988, back in 2016. So Biden wants to pick that up. Polls would suggest now with a Democratic governor that he might be able to do that. But we got to focus on the policy here, because Jared Bernstein, who has been the longtime economic advisor to Vice President Joe Biden for years now, has crafted a very moderate, centrist approach to reopening the economy. It focuses on workforce development. It focuses on infrastructure to some extent, and of course, racial inequality. Right. So he's trying to bridge the progressive and the centrist wings here, and he's been relying on some other folks. And I want to give, I also want to tell you that based upon my reporting, former Commerce Secretary Penny Pritzker has also been working with the Vice President's team on this as well.
Interesting. Kevin Cirilli, what's so important here, and I had the clearest memory in that first Tuesday of November 4 years ago, staring at the screen and staring at your suburbs of Philadelphia and knowing something historic was happening. Can this speech pull the marginal voter in those Philadelphia suburbs towards Vice President Biden?
Well, in order for Democrats to win the White House and to flip the Senate, they need to outperform in the suburbs around the country, not just outside of Philadelphia, but around the country and counties like it. And so, that's why I think you're seeing such a concentrated effort to win back the suburbs. We saw it in the midterms, and that's why they were able to make gains in the House of Representatives. But now with the Senate in play for Democrats, they're really focusing on the suburbs and towns like Scranton all over this country.
Kevin, free trade does not win elections in 2020, and the former vice president has got to try and convince the American electorate that he will be harder on trade situations with the country of China. China, China, China. That's the president's way of talking about it again and again and again, and it resonates with the public. How does the vice president change that today?
So Democrats are saying that they want to win back allies in the global order, so to speak, with Europe joining the United States to pressure Beijing into behaving more like a good actor. And so until that, they're saying that it can't be just a go-it-alone approach, that it has to be America with Europe and with the coalitions from the World Health to NATO to every world, coalition that we've seen. Republicans are pushing back on that. President Trump says only he can be as tough on China. But you're absolutely right. In terms of the USMCA deal, that's a message that Republicans want to take to states like Michigan, states like Wisconsin, because that's something that President Trump campaigned on, that he would get rid of NAFTA. And he's going to try at every twist and turn to link Joe Biden to NAFTA when he can.
Kevin, just taking a step back, we're finding out more about Vice President Joe Biden's platform, and it seems like it is not that radically different than President Trump's when it comes to economic policy, when it comes to trade. Is he trying to paint himself as the status quo but without the drama? Is he trying to basically paint his campaign as a referendum on President Trump rather than getting people enthusiastic about him and his platform per se?
That is absolutely correct. And when I talk with sources on the Biden campaign, that's exactly what they're saying. There was a phrase in Washington during the Obama years of "no drama, Obama," and so Biden is really trying to embrace that, inherit that in many ways, and suggest that he would provide the certainty, and not just to the markets, but to many Americans who have been really overwhelmed by what's been going on. But look for those debates, because I don't think Trump's going to take that lightly.
He is not, Kevin. He's not getting a free pass on this whatsoever. How does the former vice president convince the American public, the electorate, that he will be tough on China and trade when he was in the administration for 8 years and they gave them a pass on all of those issues?
Well, and not just when he was vice president, but also when he was on Senate Foreign Relations. So there's this whole record of his time in Congress as well that will be openly debated. And Jonathan, I think what today marks for the Biden campaign is a set of policy proposals that are going to come out, and I think the foreign policy one will be incredibly interesting to report on and to discuss as well. But as of now, it all comes back to those coalitions, and quite honestly, I think they've been enjoying the luxury of having President Trump being out there at the forefront and kind of, waiting in the wings, so to speak. So, I think today I'm going to be looking for a progressive reaction. What will progressives say on this front? Yeah. And then moving forward, can he continue to unite the party but have progressives on his side in what is increasingly going to look like a moderate economic approach?
Kevin, great to catch up with you, sir. Tom Keene, this is where it starts to get difficult for the former vice president. The pandemic in America has been a mess. We can all agree on that. And the president has looked a lonely figure. That's allowed the former vice president to sit back and allow the referendum on this presidency to play out. As he steps in and steps up, that's when it starts to become a choice. And if the progressives push back against a moderate stance a little bit later, guess what? That is fuel for the president to say, this man is a Trojan horse for the radical left. Don't vote for him. And that's going to be the contest in the economy in the months to come.
Yeah, well, let's be clear, folks, and folks, I'll get it out on Twitter at some point, but Bloomberg led this morning with a terrific summary of this important speech by President Biden and Vice President Biden. And what you see there, John, that is so important is his team of economic advisors led by Jared Bernstein are clearly centrist in nature. I don't see economic advisors to him of the liberal left that President Trump would critique.
And I don't think the President of the United States, though, Tom, is going to allow the electorate to define former Vice President Joe Biden as a moderate. That's where the tension will be in the weeks and months to come. And that tension starts to build quite seriously a little bit later. From New York City this morning, good morning to you all. Equity futures down 0.1%. This is Bloomberg.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
London. Toolstation are here to help get your job safely started and finished, with over 60 branches within the M25. All open with social distancing and contactless click and collect from 5 minutes. And with 20,000 top trade quality products to choose from. Order online now for collection in London branches and get £5 off when you spend over £30 with the code LON530. So, get your job started at toolstation.com. Terms and conditions apply.
False information about coronavirus is being spread everywhere. Popping up here, being shared there. Ping! Reaching and tricking more people with every share. They don't even understand the harm it can cause.
False information can be hard to spot. Make sure you know what you're sharing. Don't feed the beast. Visit sharechecklist.gov.uk. Stay alert, control the virus, save lives.
From New York City with equity futures bouncing back, we're live on Bloomberg TV and on Bloomberg Radio. This is Bloomberg Surveillance. Alongside Tom Keene, together with Lisa Bravis, I'm Jonathan Ferro. 2 hours away from the opening bell this Thursday morning. Good morning to you all. We bounced back a single point on the S&P 500. Really choppy price action through the week so far, but one dominant factor in all of it. Big cap tech in America absolutely dominating. A little bit more on that a little bit later. In the bond market, Treasury yield shaping up as follows. Around about 60 minutes from the claims data in America, we come in a single basis point on a 10-year to 0.65%. I'm going to skip over what's happening in foreign exchange and get straight to the gold market. What a story over the last several months. Flat on the day, Tom, but 1809 is where we trade right now. Yeah. That has been one of these stories of this market in the last several months.
I'm glad you mentioned it, 1820 earlier. 1880-ish, 1890 is a 2011 high, so we're a little bit distant from that. I'd also note renminbi stronger, goes through 7. CNY goes 702, 7.00 to a 698 at one point this morning. Right now, get out the calendar. It is July, and it is July-ish on the way to, well, you know, earnings season. It is total chaos, but we need perspective, and we get that from the Bank of America and their equity strategist, Jill Carey-Hall. Jill, there's 8 ways to go here, and I love the detail of your research note given the present chaos. I want to go to somewhat minutia, which is the wiggle room corporations have with capital expenditures. The way they do this is they reduce them in crisis. Is that what's happening now?
Hi, yeah, thanks for having me. Definitely, we're seeing that, overall corporate cash deployment has come down. We've seen about 20% of the S&P 500 suspending buybacks. We've seen a little over 10% of the index suspending dividends. And then CapEx has really been an area that corporations have cut back on. When we look at, what happened last quarter, CapEx spending was essentially flattish. And then this quarter, we think it'll continue to remain weak. When we look at CapEx guidance, which some companies will give on their planned spending, that's been extremely weak. Very few companies, giving it now to begin with as overall guidance has grown scarce. But for the ones that are, it's pretty close to 2009 levels. So there's sort of that disconnect between the improvement we've seen in the ISM and companies are still very negative.
What I know, Jill, is Mr. Buffett and Berkshire Hathaway take out Dominion, and Dominion is actually going to deploy the billions from Mr. Buffett over to a more conservative tone on their balance sheet. Would you expect that to happen throughout all of corporate America?
Well, I think what we've seen when you look at, the Bank of America Global Fund Managers Survey, investors have really honed in on companies' balance sheets. There's a lot of leverage out there, particularly down the market cap spectrum. So investors have been wanting companies to use their excess cash to clean up their balance sheets over other cash uses. Now, we have been in this lackluster CapEx environment, so, I think there is sort of a demand for that as well, where companies can invest in areas that it makes sense, and certainly that's beneficiary for companies, whether it's tech CapEx or more traditional industrial CapEx. But I think right now a lot of companies are really being cautious on deploying big projects given the uncertain environment. So we're not looking for a big CapEx boom this year, but certainly if economic conditions continue to improve, we'll be watching the guidance closely to see if that can suggest a pickup.
Jill, we're seeing that this morning. Walgreens coming out, cutting over 4,000 jobs, suspending the share buyback. Saw it yesterday evening. Bed Bath & Beyond cutting stores as well. We see this every single day. Is this why you think we need to own the mega cap stocks with the strongest balance sheets versus the small cap stocks with something a little bit more fragile beneath the surface?
Yeah, so we continue to prefer large over small caps right now. I think, overall the fundamental backdrop is still much weaker down the cap spectrum. So this earnings season, which kicks off next week, large cap earnings should fall about 40% year over year. Small cap earnings are going to be falling a lot greater. Analysts are looking for about 100% year over year decline in earnings for small caps. So even though recovery certainly benefits small caps. So if we see a more sustainable recovery and we stop seeing a pickup in cases, that could be positive. But obviously the fact that, there's a lot of fear right now about the rise in cases. Small caps have been generally underperforming again since early June. Escalating trade tensions are another risk there, and one of the key reasons smaller stocks underperformed in 2019. So you also have really expensive valuations, not across the cap spectrum, but for small and mid caps, they're at record highs right now. And a lot of the economic data on reopening suggests you're starting to see stalling or decelerating trends for small businesses. So, as you mentioned, balance sheets are a lot cleaner for larger stocks. You have a lot higher quality for the S&P 500 relative to small cap benchmarks. So, that's still something we're thinking about right now. But certainly, if you are an investor in small caps, still opportunities. If we do see a bit of a tactical rotation into value, that's something we expect could work across the market. But being more selective within small caps makes sense, just given that a lot of the value stocks within small caps have become increasingly synonymous with leverage and risk.
Jill, your comments make a lot of sense. Your caution makes a lot of sense with the bigger picture of the pandemic and the accelerating job losses in some sectors. At the same time, valuations have reflected this. And there's a theory out there put out by JP Morgan that really the surprise could be to the upside if we get a stalling out of the pandemic or better than expected data. And you could see that small caps rally and some of the larger caps, the mega tech stocks, sell off given where valuations are. Why is that flawed, in your opinion?
Well, I think if we do see a much more sustainable recovery, that is when we've looked at size and style performance, you do tend to see small cap stocks, value stocks tend to rally during those early recovery stages of the cycle. So we obviously saw some early innings of that, and now that's called into question. I think one risk this time is that small caps were just a lot worse positioned going into this crisis than they were going into a lot of the prior recessions. They had record leverage ratios that they've never had before. They've benefited from QE and all the access to cheap capital. They're a lot lower quality today. So, and it's a crisis that hurt small businesses. So I think there's some additional risks there as well as around trade.
Jill, this is a huge deal. Come on, we've got this company, John Farrell mentioned Boots out with layoffs. We got Walgreens with layoffs, and on and on and on. There's going to be a job carnage out there. The Chancellor of the Exchequer spoke about it yesterday. Vice President Biden's going to speak about it today. What is the elasticity of those job cuts to the revenue line of small, mid, and large cap? The answer is small cap's going to get absolutely crushed on this, right?
Yeah, I mean, I think the labor market backdrop and like I said, the data we've been seeing kind of stalling and decelerating for small businesses is a big risk. And, overall for the market, we think there's a lot of risk of, just payback risk as we've seen all the stimulus and moving out into year end. And then as volatility picks up around the election. So, we're at this point, even for the S&P 500, the market's trading above our 2,900 target for year end. So we're more neutral on equities at this point and think it makes sense for investors to really kind of pick their spots.
Okay, the one final question then, and folks, I'm distraught this morning because I have my pasta maker on order at Sur La Table, and they announced they're going bankrupt this morning or last night or whatever, and I'm never able to make the pasta to have Pharaoh over so he can get some really good quality Tom Keene Italian pasta. That's all great, but it's going to come in an Amazon box. What does the CapEx reduction, what do the job layoffs do to the top line fundamentals of Apple and Amazon and the others? Are they immune from this dynamic?
Well, I think, and Amazon and some of those companies are actually the ones that have been the CapEx spenders during this current crisis and kind of keeping S&P 500 CapEx positive as all of the commodity-oriented areas have cut back significantly. But then in terms of CapEx beneficiaries, you've certainly seen kind of a slowdown across the board in terms of both more cyclical CapEx spending from the commodity complex and then overall spending on tech. But if we are in a more permanent, work from home type of environment, certainly some of the mega cap tech companies have benefited. We're equal weight tech overall. We think tech looks very positive fundamentally, strong balance sheets. But obviously that's one sector where there could potentially be regulatory risks that tech has largely escaped up until this point. So as we go into the election, that's one of the reasons we've just been equal weight, in addition to obviously the very strong run it's had.
Jill, brilliant catching up with you. As always, love hearing from you. My best to you and the team at Bank of America. Say hello to Savita for us as well. Jill Carey-Hall there of Bank of America. Some really great Tom Keene Italian quality pasta. There are two words in that sentence that don't belong there. First word, Tom. Second word, Keene. I can confirm I've tried that pasta a few times over the years at Casa Keene. Tom, let's talk about the cuts. Let's talk about the cuts. The second wave of cuts is something a lot of people are worried about, and it's serious. It's the second shock for this economy.
And, John, you were brilliant yesterday on the Chancellor of the Exchequer squeezing through. I thought The Telegraph, The Guardian, all of them did a great job today in their analysis. Carl Weinberg, John, was brilliant on this weekend and high-frequency economics. And this is the tip of the iceberg. Forget about United Airlines, Walgreens. I mean, they're all going to be taking marginal cuts. And, John, I'm sorry, it will devolve down to the revenue line of consumer product companies instantly.
We'll talk about this story a little bit later in the program from New York City this morning, alongside Tom Keene, together with Lisa Bravitz. I'm Jonathan Ferro on Bloomberg Radio and on Bloomberg TV. This is Bloomberg Surveillance.
Now let's see what else is going on around the world. Here were the latest headlines is Michael Barr. Good morning, Michael.
Good morning, Tom, Lisa, John. As the case count soars, the coronavirus death rate in the U.S. is falling. But as we hear from Bloomberg's Martin DeCaro, federal health experts say that encouraging trend may not last.
After the country set a daily record for new virus cases for the fifth time in 9 days, Dr. Deborah Birx is asking younger, healthier people who are contracting the disease to be careful about who they come into contact with.
We are worried now that as cases spread, that it's getting to the older parents and the grandparents. Get tested and protect those in the household.
As the White House Coronavirus Task Force Coordinator, Dr. Birx says there's something else people should do, and it's easy, maybe even fun. Wear a mask.
Mask can be a fashion statement.
A fashion statement that can save lives. In Washington, Martin DeCaro, Bloomberg Radio.
Today is the last day the U.S. Supreme Court will issue opinions this term. We'll hear the outcome of cases involving President Trump's tax returns and financial records. The Manhattan District Attorney's Office subpoenaed President Trump's tax returns and financial documents as part of an investigation into hush payments to women who alleged extramarital affairs. Congress also wants to see Trump's tax returns. The Pentagon's top leaders are going before Congress for the first time in months. They're likely to be questioned this afternoon on several major controversies, including the differences with President Trump over the handling of protests near the White House last month. Police say the mayor of South Korea's capital, Seoul, has been reported missing, and a search is underway. Authorities say officers are looking for Mayor Park Won-sun at a Seoul site where his mobile phone signal was last detected. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg. With the Bloomberg Business of Sports Report, I'm Michael Barr. Atlanta Dream co-owner Kelly Loeffler has sent a letter to WNBA Commissioner Kathy Engelbert objecting to the league's initiatives to honor the Black Lives Matter movement. Loeffler, who is also a Republican U.S. Senator, asked the league commissioner to scrap plans for players to wear warm-up jerseys with Black Lives Matter and say her name, and instead put an American flag on all uniforms and apparel. Loeffler says we need less, not more politics in sports in a time when polarizing politics is as divisive as ever. Engelbert issued a statement in response to Loeffler saying the WNBA is based on the principle of equal and fair treatment of all people, and we, along with the teams and players, will continue to use our platforms to vigorously advocate for social justice. The WNBA Players Union put out a tweet saying, "Enough," out in response. And that is a Bloomberg Business of Sports report. I'm Michael Barr.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our #1 priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
When you're facing a problem, like how to make an electric car more efficient, you could sit down and talk it through. But at Honda, we decided to listen to the wind tunnel. With wing mirrors? Or without? With? Without? With? Without? Or with cameras instead of wing mirrors? The new Honda E with wind cameras, not mirrors, because we listen to the wind. Honda, the power of dreams.
In a sense, all developed economies are now seeing very, very loose fiscal policy, very, very loose monetary policy. So, who are you going to depreciate against?
BlackRock's Rupert Harrison there. You've seen the loose monetary policy. We've witnessed the loose fiscal policy. Who's going to try and devalue their currency? And what against? From New York City this morning, good morning to you all. Alongside Tom Keene and Lisa Abravis, I'm Jonathan Ferro. In your equity market, up a single point on the S&P 500. We advanced not even 1/10%. In the bond market, Treasury shaping up as follows. Yields come in a single basis point on a 10-year to 0.65%. And just to give you a quick feel of foreign exchange, in G10, the dollar is weaker. The euro advancing just a little bit, cable firmer by 0.25%. Front and center for me, Tom. We talked about it at the top of the program. The first shock was all up front at once. It was the lockdown. The second shock is the persistent water torture of being below capacity for an extended period of time. And companies have got to react, and they're reacting in the last 24 hours.
No question about it. What we try to do with our great booking team here at Bloomberg Surveillance, folks, for radio and for television, and give you the right guest at the right time. We do that this morning with Claudia Sahm. If you don't know her, you should. She's out of Denison. She studied under Shapiro and Kimball at Michigan, which in itself is a really twisted thing. And we're thrilled that Dr. Sahm could join us today because she is outrageously frank about the state of labor and housing economy right now. Claudia Sahm, thank you so much for being with us. Joe Biden is going to go out today and he's going to give a speech to drag the Democratic Party back to the center. In terms of economic policy, Dr. Sahm, can he succeed in doing that?
Well, first of all, thank you for having me on the show. In terms of whether Joe Biden can succeed, I just want someone to succeed that is in Washington, D.C. So he's in a position to help set an agenda potentially, but we need Congress, members of Congress and the current administration to act. Like they have got to send out more money this summer.
How does a Democratic voice, and clearly you're associated with that form of politics, and that I understand Jared Bernstein working with Vice President Biden, how does Democratic economic policy sell to disaffected Republicans? How do they do that? How do they pull free market Republicans over to a more government-centric solution?
Democrats don't need to. The American people are pulling all of us towards policies. We have millions of families that are struggling. They have lost income. We have small businesses failing. We have state and local governments in absolute budget crisis, and we do not have the public health issues under control. You don't need anybody in D.C. to tell you we have a problem. We need D.C. to really figure out how to act and do something. And I will say there's a long-standing adage that we are all Keynesians in a foxhole, right? And we are deep in this foxhole. And so we saw it with the CARES Act. Republicans and Democrats came together, and they went big, and they absolutely have to do it again and more, I think.
More money, and this is something a lot of people are saying. The question is, how do you direct that money? What are these policies? And one thing I believe that you've advocated for is to send more checks out to Americans, basically additional helicopter money rounds. And a lot of people saying getting closer and closer to modern monetary theory, MMT. Why is this the approach that you think is what's required here rather than a targeted approach to encourage employment?
At this moment, we need an and both policy approach. We absolutely need to get money to those families and businesses and communities that are hard hit. We absolutely have to extend the enhanced jobless benefits. And we need to go big and broad. To go big, to pump hundreds and billions and trillions of dollars into the economy, you have got to get it to everybody. And that's the reason that I think that the rebates, another round of recovery rebates, would be highly effective. And we know, I have research already on the 2020 rebates, these things worked. So let's do more of big support. And we do it in a recession. This is the moment where many economists from left to right and those who have been at the frontier of modern monetary theory, in a moment like this, we all hold hands because we're in a recession and we have to get us back to full capacity, get people back to work.
All right, all holding hands, perhaps, and no one is a deficit hawk anymore. There is a question, though, when you start spending this amount of money and deepening the debt load, at some point, even if you don't see a spike in borrowing costs, which, to be clear, we are nowhere near that. Borrowing costs are near record lows. At some point, it does drag on growth. That does seem to be what studies show. How big of a concern should that be? I understand that right now we've got a serious 5-alarm fire. At the same time, should we be concerned about how much we spend and the deficit that we incur?
Absolutely not. Not for the United States. We are in a privileged position. The studies that show that high debt loads blow up, those are not based on the United States. Those have not panned out in our experience. What we saw in the Great Recession and what we are seeing right now is the cost of going too small. is just, it's massive, and it lasts for decades and career-long, like lifetimes. It's just,
okay.
Yeah,
Claudia, you're too modest. Claudia, you got to stop with the bashful modest stuff. 2012, Sam Shapiro Slemrod. You did the definitive research out of Michigan on the efficacy of stimulus by paycheck. Clearly, President Trump wants this. Do we do better by stimulus directly in paycheck, or is there a better Claudia Sam path?
we need to send out money. We need to just get it in people's bank accounts. The unfortunate reality today is we have millions of Americans not getting a paycheck, or their paycheck has been cut. We know from after the Great Recession, the payroll tax cut was the least effective. The making work pay tax credit was less effective than the 2008 tax rebates, right? So we know that the best thing to do is just send out money. And in this environment, putting it through payrolls is a real problem. I'm all for keeping businesses going so there are jobs to come back to, but the way to help workers and families is getting the money.
Claudia, appreciate your insight this morning. Really important perspective. Claudia Sam, the Equitable Growth Director of Macroeconomic Policy. Tom, important decisions that need to be made, and we saw some of them made yesterday in the United Kingdom. Just a flavour of how policy is going to evolve in the months to come.
What do you think? What do you think, John? Give us a quick redo on that. What do you think?
I think he came up with some smart policies to incentivize rehiring. If there's criticism, Tom, at $30 billion, it might not be big enough. And I don't think even the Chancellor thinks his job is done. Most people assume he's got to come back. And even after this month, once Washington does what Washington's got to do, most people assume Washington will have to come back as well.
John, that's clearly what I heard from Anna Edwards this morning, the idea that there's got to be another round sooner.
Setting you up this Thursday morning for the price action. Not much of it right now. Choppy overnight in the equity market. Futures unchanged. From New York this morning, good morning. This is Bloomberg Surveillance.
Have you wanted to... Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Listen, that's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you. Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
You always say the best thing you ever did was join up. I bet you don't get the same experiences in Civvy Street. Remember those amazing deployments we had? And that feeling of pride. We'd love to have you back. Go on. Feel the pride again. Search RAF Rejoin Us.
Who says you can't have a laugh while getting serious about America's pastime? On the daily podcast Locked On MLB, comedian and baseball fanatic Paul Francis Sullivan talks about each team, each pennant race, and everything else in the game. from rule changes and controversies to baseball cards and stadium food.
For those of you who are not familiar with me or the old show, I love to obsess over baseball. I'm talking baseball over the Super Bowl. We had a TV showing the division series during my wedding.
Search Locked On MLB on TuneIn to listen today.
We're all guilty of spending too much time on social media. Why not add something genuinely useful to your feed with TuneIn? Follow at TuneIn on Facebook, Twitter, and Instagram to learn about some of the best stuff happening around the app. You might just discover your next audio obsession.
Staying current on college hoops starts here on the Eye on College Basketball podcast. CBS Sports columnists Gary Parrish and Matt Norlander bring you commentary, insider information, and statistical analysis covering the entire NCAA.
The amount of earning potential you could have had there, or if you had gone to play at any other place with a chance to play in the NCAA tournament, win a national championship, none of us would have faulted Cunningham for doing that, but he decided this is where he wants to be in the face of a postseason.
Search Eye on College Basketball on TuneIn to listen.
The losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
The economy's not ready to be taken off of the ventilator here.
It's got to be the real economy that performs. Otherwise, none of these companies are going to be able to make it through to 2021.
The COVID virus and survival economics has blinded a lot of investors about what are the global tensions going on. And right now, the biggest global tension is the war between China and U.S. for sort of global positioning.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us. Our simulcast on Bloomberg Radio, Bloomberg Television from New York and across this nation today. Any number of themes, but there are two front and center right now. The vice president to speak in his Scranton, Pennsylvania. We'll see that later in the morning. Before that, in this hour, we'll see jobless claims, well over 1 million widely expected, and all of that devolving into the layoffs here, the layoffs there, the layoffs presumed to come. It really sets us up for an American labor economy that must be addressed. And of course, with that, the market reaction as well. John Farrow, the news flow has been really odd recently and really crescendos this morning into these announcement of job cuts at too many companies.
By any standard, Tom, we're in a labour market crisis. Despite the sequential improvement we see over the last couple of months, there is a ton of work still to come. And what we've seen from the big companies is they're starting to right-size the business. Mohammed Al-Arian was on the programme just a week ago talking about this. This was the fear, the second wave, Tom, the job cuts, the companies turning around after the shutdown and saying, you know what, this new world, we have to cut into it because we're not returning to normal anytime soon.
And what's so interesting here, and Lisa Abramowitz, you highlighted this yesterday, that successful 10-year auction at an ungodly rate under 1% as well. I believe if I have diminished growth, if I have layoffs, Lisa, that migrates towards ever lower yields.
It shows the limitations of Fed policy and just pushing borrowing costs lower, frankly, because United Airlines saying that they could lay off as many as 36,000 employees yesterday. Walgreens Boots Alliance coming out today saying that they're going to cut 4,000 jobs. These are not going to be jobs that are saved by lower borrowing costs. These are jobs that could only be saved by an economy accelerating and people going to stores, buying things, getting on planes, which they're not going to do in the same kind of numbers as they have for years. So, Tom, again, this gets back to the real economy. When can we get it back going again? And not just how much money can we pump into the system?
Well, it will be most simple. The data check right now, John will give you a better data check than me in a bit, but all you need to know is that same churn in equity markets moving towards 930, and you wonder if we'll see green on the screen by then. I'd also know gold up at 1820, not near the 2011 high. And the big news in FX with that stimulus and better feeling in China, renminbi stronger and through 7 yuan per dollar. Right now, a joy to welcome Jeffrey Yu. He is with BNY BNY Mellon is a senior strategist, and we're thrilled that Jeff Yu could join us from London this morning. Jeff Yu, it's stimulus here, stimulus there, stimulus everywhere. Is it a proven prescription for better economic growth?
Well, actually, if you look at what's going on in Beijing right now, relatively, they're not doing as much stimulus. I mean, that's been a question. But if retail can help with the stock market, then why not? So I think the jury's still out. It depends on what kind of stimulus. But looking at sterling today, it seems like markets believe in it.
Jeff, we've heard this argument again and again and again over the last week or so, that the reopening elsewhere is more efficient, the recovery is more dependable. You want to tilt away from the dollar. I've lost count how many people have told me that in the last several weeks on this program and elsewhere. Does it resonate with you, Jeff?
It does to some extent, but they're probably less of a fundamental story, but more of an asset allocation story. So you can, yes, track the differences in terms of the opening and performance, but the fact is markets have been overweight US equities, overweight dollar cash, for the best part of the last 3 or 4 years. So that's where the adjustment needs to happen, and that alone would undermine the dollar, and you have the economic argument to complement it. So net-net, yes, I think it is a dollar weakness story, but it's going to be choppy, and I'll focus on equities as well.
Well, Jeff, let's talk about where you push that view and through what currency pair at the moment. Is this a story where we'll see flows build into Europe, where we start to see an appreciation for China again and the mainland? Where do you see it going?
I would certainly favour Europe over emerging markets right now. So Europe has a positioning story, but also has a valuations and story in terms of China. So, yes, we do, see the price action right now. But let's remember the arguments in 2014, 2015. Is there an earnings picture? And on top of that, is there a balance of payments picture? I'd argue the latter is positive in RMB right now. Services balance is really improving, but we need earnings to follow up. And again, broader EM still very fragile right now. So I'd still focus on the well-performing VMs, and that's euro for the time being.
Jeff, on one hand, you've got this liquidity story pushing people further into risk and saying perhaps it's time to go further into Europe or emerging markets. And on the other hand, you've got an increasing number of people on bubble watch. I want to talk about the key center for bubble watch currently, which is the Chinese stock market. You've seen an absolute surge there with people saying, I can't lose. I'm just going to pour all my money in because it seems like Beijing has my back. How much more do you see that rally going?
Well, it's interesting that they would view that, and Beijing has their back, and I would say the PBOC, the regulators, would argue otherwise. They're not providing liquidity right now. They're allowing the retail money, leveraged or unleveraged, to actually flood in, but it's actually sort of tightening conditions as well. So there's actually gentle tightening behind the scenes. So right now, yes, I've seen some of the forecasts, the momentum is driving it, but again, it goes back to earnings growth. If earnings growth is there, then we can revisit higher levels, but with GDP growth, let's say if we can get to 4 or 5, if it undershoots that, then I think further gains will become more challenged.
Jeff, there have got to be some people watching this who are thinking to themselves, since when do earnings matter? Earnings have been falling out of bed. We've had a pandemic. We've got an economy that's slowing down. When are fundamentals going to actually matter? Do you think that currently the earnings picture is being adequately reflected when people get some information about it in stock valuations?
So I think the test will really come when we genuinely see the hard data starting to follow through. So when we see ISMs, when we start to see labour market data, so average earnings on the part of the workforce, when they start to rise, are we seeing it being channeled into corporate earnings? Are we seeing the guidance being lifted? So right now there's hope that better hard data on the economic side will lead to better guidance about earnings. If there's a disconnect there, if we start to say, okay, unemployment rate falling, so in the US, really steadily falling below 10%, but there's no guidance lift, no earnings potential on the part of US corporates, and that's when the story begins to crack. We're just not there yet.
Jeff, for you are such a student of the London financial experience, and you're now with the Bank of New York Mellon, with which, without question, has the greatest heritage of American banking going back to Alexander Hamilton and I believe 1784. Give us your thoughts on how we come out of this pandemic of global Wall Street New York and global Wall Street London. How are we going to come out of this?
Well, coming out of this, I think these cities need to reinvent themselves as well. So we're hearing different things about, how agile working or home working, does that boost productivity? Does that boost efficiency? But here's what I'm interested in. So the financial services sectors in both financial centers are always going to be amongst the most productive. But physical presence matters. What is it? One Wall Street or city worker can support 3 to 4 ancillary workers, so the baristas, the taxi drivers, etc., etc. If from a physical point of view, these areas hollow out, you're not going to have the multiplier effect, right? So if only one Wall Street or city job can create, let's say, 2 jobs rather than 4, what happens to the other 2? That's the role for the government. And that's where the future is. How do you create those new jobs?
So, really, really, really important conversation. If that is the case and we lose the multiplier effect in finance, that means a diminished aggregate demand. That means a disinflationary tendency as well. Does that underpin equities or does it destroy equity valuation?
So it will certainly challenge equity valuations, but now what the market is telling you, don't worry, governments will step in. If there's no aggregate demand there from the consumer, then governments will generate that. But how long can this continue? UK will run a deficit of 16% for this year. That's the latest estimate. Can you run 16% deficit every single year? I don't think so. They're buying time right now, but again, how do you create those new jobs? How do you manage the labour force displacement? This will be the policy challenge for a generation.
Hey, Jeff, great to catch up with you, sir. Jeff Yu of BNY Mellon, the senior strategist. Jeff, fantastic as always. Nice to see Jeff in another seat, I've got to say, Tom. Always appreciate his insight.
Yeah. Now, this is really important, folks. What we've always tried to do at Bloomberg Surveillance and on John's other properties, including the Open and the hugely missed the Real Yield as well, is get people with real acuity and critical thinking skills. And the gentleman, John, out of London School of Economics certainly delivers that.
He is absolutely fantastic, and I'm looking forward to getting him back on a program again soon. 20 minutes away from jobless claims expected to remain elevated all over again. And Lisa, it's something you've talked about for a while. The second wave of job cuts we've all feared. Just some subtle hints over the last couple of days that that's starting to build.
Yeah, the 36,000 potential layoffs from United Air. And then this morning, Walgreens Boots Alliance announcing another 4,000 cuts as you see a slowdown in customer activity. What I find interesting about Walgreens, John, is the fact that these are staples. They noted a decline in prescription sales because people aren't going to doctors' offices as much. This isn't necessarily consumer discretionary, which raises a really key question in my mind. At what point does the slowdown in the economy really hamper the growth at some of the companies that have been rewarded in all of this for being basic purchases that people have to go out and make? At a certain point, a slowdown in the economy affects everybody, John.
It's about foot traffic. That's what it comes down to. And many people said this pandemic will exacerbate, accelerate existing trends, and foot traffic and stores on Main Street are part of that story. And we've seen the bankruptcies pile up through the last week on Main Street for some of the big retailers and some of the well-known names in the United States of America. In the United States of America, in around about 20 minutes' time, the focal point will be jobless claims in America. The coverage will continue right here on Bloomberg Surveillance.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, thank you very much. The coronavirus pandemic is hurting nursing homes particularly hard. At least 54,000 residents and workers at nursing homes and other elder care facilities have died of COVID-19 in the United States. According to the data compiled by the New York Times in late June, the U.S. has more deaths connected to nursing homes than any country other than Brazil has in total. People over 65 represent more than 3/4 of America's more than 131,000 coronavirus deaths. President Trump and Dr. Anthony Fauci have clashed about COVID-19 recommendations. White House Press Secretary Kayleigh McEnany explained how Trump feels about Fauci's expertise.
The president has confidence in the conclusions of our medical experts, but it's up to him to determine what to do with that information and to take what we hear from Dr. Fauci, Dr. Birx, and others, and take what he values in their opinion and come to the ultimate consensus that's best for this country.
President Trump tweeted that he disagreed with the U.S. Centers for Disease Control and Prevention guidelines for safely reopening schools because they are very tough and expensive. Attorney General William Barr talked about recent nationwide protests While Barr says he believes Black Lives Matter, he stopped short of supporting the movement.
The Black Lives Matter, has focused on a particular problem, and it is a problem, and it's a problem that at least the trajectory has been improving, and they're ignoring, I think, these broader issues.
Barr, speaking to ABC, says he believes that there is widespread bias against African Americans and how they're dealt with sometimes by police. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Influence.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car, comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel Le Shuttle, a safer way to France and beyond.
False information about coronavirus is being spread everywhere. Popping up here, being shared there. Ping! Reaching and tricking more people with every share. They don't even understand the harm it can cause.
False information can be hard to spot. Make sure you know what you're sharing. Don't feed the beast. Visit sharechecklist.gov.uk. Stay alert. Control the virus. Save lives.
There will be citizens of Hong Kong who may be looking to move elsewhere, to start a new life somewhere else, to take their skills, their businesses, and things that they've been running under the previous set of rules and arrangements in Hong Kong and seek that opportunity elsewhere. Australia has always been a very welcoming country to such people from all around the world.
Scott Morrison, the Australian Prime Minister. Hong Kong becoming a point of tension between China and many other countries, including Australia. In this market right now, equity futures totally unchanged. On the S&P 500, we go nowhere. 1 hour and 12 minutes away from the cash open in New York this Thursday. The bond market bid kind of slightly, yields in a single basis point on a 10-year to 0.65%. And in foreign exchange, the dollar against the bulk of G10 is weaker, with the euro advancing just marginally by around about 0.1%. From New York City this morning, good morning to you all. Alongside Tom Keane and Lisa Bravitz, I'm Jonathan Ferro. Tom, that tension between China and many other countries, with Hong Kong at the epicenter of it over the last several weeks.
And John, changing at light speed, I would notice claims, folks, in about 12 minutes, and that will be important. It's changing at light speed, John. It's just, I've been shocked at the change just in the last number of days, and we need to get perspective, yes, on the view from 60,000 feet, but far more on the fabric of Hong Kong. Enda Curran joins us now, of course, with all of his great work on economics for Bloomberg News out of Hong Kong. And I want to go back to the reality of global Wall Street, which is you end up in Hong Kong, and if you are ever so lucky, your offspring can go to the diocesan boys' school or the other 10 or 12 elite schools of Hong Kong. I don't understand how they move forward under this new regime. How will the education, how will the fabric of the city change?
Well, clearly, Tom, there is going to be a crackdown on the civil liberties side of things here. There's no doubt about that. And we'll get more details on that as the national security law is pushed through. But critics are making the point that you're making, that it will change everything from the education curriculum right up to the kind of offences you can be charged for on the street. The business side of it, of course, is a little bit more ambiguous at the moment. I mean, we've had commentary from the pro-government side saying you can come here and do business, and if you stay out of politics, you won't get into trouble. And that seems to be the kind of modus operandi that a lot of business people are taking in response to so far. But, you know, as this national security law is enforced, we will start to get some case law and get some precedent, and then we'll start to see how it impacts not just the civil liberty side of it, but the business side of it as well. And I'd say, if you say Australia, for example, in that pitch about taking migrants from Hong Kong, they're also pitching to win business from Hong Kong too.
Well, Enda, let's talk about Australia, because I do find this fascinating. The Chinese Communist Party has tried to use, and used successfully, the commercial leverage it has over many economies and many governments around the world. Australia is very leveraged to the China growth story, and yet this is the political stance they continue to take. What do you make of that, Enda?
Yeah, most definitely. I mean, China is Australia's biggest trading partner, and until recently, Australia had been trying to balance it. Of course, its old alliance with the US and now the China story, but they definitely are parting ways of sorts. And there's no doubt that this is certainly a provocative move in China's eyes from Australia. They were quick to respond and accuse Australia of interfering in their own business, and they told them it will never succeed. But as I mentioned earlier to Tom, Scott Morrison, Australian Prime Minister, made clear that they're not just looking to take people from Hong Kong, they're looking to win business from Hong Kong. So that's also going to the core of Hong Kong's status as a finance hub and as a key gateway for China. So there's no doubt we're seeing differences now. It's not just China and Australia. We're seeing tensions with China on many fronts. China and India, China and the UK. All of them have an economic metric, whether it's India banning 60-odd Chinese apps, whether it's the UK considering its stance on Huawei. There's an economic side to all of the geopolitical spat, and it only seems to be getting worse. And it's moving at a pretty unpredictable pace, I would say, John.
And there's this tension here of power and who has it. Hong Kong once was a big proportion of mainland China's economy, not as much anymore, which raises a question of what kind of power Australia and the United States have in order to punish Beijing for its incursions into Hong Kong's autonomy. And the latest is that the U.S. is considering perhaps disrupting the peg to the dollar that the Hong Kong currency has had since 1983. Can you talk about Hong Kong as a conduit of dollars into mainland China and how that could be a potential weak spot for Beijing?
Oh, look, it's still far and away a huge source of capital for the mainland elite. There's no doubt about it. As you mentioned, it's a big source of FDI into China. And of course, it's a big It's a big hub for raising capital. You see the big Chinese companies listing here in recent weeks, the big tech firms. They come here, they raise equity, they sell bonds and the like. So it plays a huge role in terms of a capital gateway in and out. In terms of the threats that are being leveled against it, I think the Hong Kong dollar one is kind of viewed as something of a nuclear option, really, if the US were to take it. And the US could, of course, crimp down on the amount of dollars that could be traded on this side of things. But a lot of people say that wouldn't just cause problems for Hong Kong, it would cause big problems for the global financial system and for US banks and US companies too. So, when you have Australia and the US and these other countries making threats, they can make these threats, but it's a question of how far they can go before it rebounds back in their own economy too.
And all this talk is great, but we want to cut to the chase. How's real estate in Hong Kong? Are you sliding into 3,500 square feet up on the hill?
I wish, Tom. The real estate is holding up quite well here. In fact, capital is pouring into Hong Kong, and there's a thinking that's mostly because the Chinese government are doubling down on the Hong Kong story at the moment. The stock market's doing well. There's been some big listings here, and on a net basis, money's pouring in. So the housing market, look, it has softened around the margins, but nothing like the kind of correction you might expect given the political pressure that there has been on the city. That's maybe a picture that might change over the coming months, but it's one that we're just going to have to wait and see how it plays out.
I'm just going to take a guess and say that, Ender, I'm sure you might like the housing market there to soften up a little bit, considering the prices that we've seen over there over the last decade, several decades for that matter. Ender, love catching up with you, sir. Ender Curran there out of Hong Kong, on Hong Kong, and the world's response to what's going on there. In your market right now, as we count you down to the jobless claims report, that comes in about 5 minutes' time, Tom. Initial jobless claims, the median estimate, 1.375 million. On continuing claims, Tom, we are looking for an improvement. That's what we're looking for in 5 minutes.
We will see. It's a complete mystery. You got a dartboard out. Get the surveillance dartboard out, John. That'll help.
Lisa, it feels like that, doesn't it? Get the dartboard out and try and guess what it's going to look like, because the range of estimates we've seen on the payrolls report and the magnitude of the upside surprises we've had over the last month, the last 2 months, it's really difficult to gauge where these indicators will come in.
And then there's a question of whether the headline numbers matter as much as the composition and the churn underneath. In other words, how many people are getting laid off, how many people are getting rehired. These are sort of the flows that are just massive. We've never seen such a transformation in the labor market. So yes, perhaps a dartboard is the best way to play out exactly how this is all going to shake out, John.
A huge amount of churn beneath the surface. Morgan Stanley, Bank of America, all talking about that. Barclays too. Michael Gapin will be joining us next, the chief US economist from Barclays, on the jobless claims numbers that drop in America in around about 4 minutes' time. From New York City this morning, on this Thursday morning, good morning to you all. Alongside Tom Keene, together with Lisa Abramovich, I'm Jonathan Ferro. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
For the Jewish Communal Fund, Noel Spiegel, former senior partner with Deloitte & Touche and past JCF president, discusses the advantages of a donor-advised fund over a private foundation.
There's a lot involved in having a private foundation. You need to engage attorneys, you need to engage accountants, file tax returns. At JCF, all of that is done for you. You don't have to get involved in anything other than making your contribution to your fund and then determining which grants that you want to make.
A JCF fund may be be opened with a minimum $5,000 contribution of cash or appreciated securities and can be used as an alternative to or together with a private foundation.
If you have a foundation, you have to list all of the contributions that you made. Potentially anybody, because the information is public, can find out exactly which organizations a foundation has made charitable contributions to.
Let JCF simplify your philanthropy and protect your privacy. Learn more about JCF's private client group at jcfny.org.
This is a Bloomberg Money Minute.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Here's to you that learned with homeschooling that your kids are smarter than you. Here's to all the self-taught banana bread bakers. And to you that rocked that very questionable homemade haircut. Costa is giving £3 to everyone that missed us as much as we missed you. Get your £3 in the Costa app today and enjoy a coffee, cake, or snack on us. Come on, you earned it. Terms and conditions apply. For details, visit costa.co.uk/terms.
In line with government guidelines, face coverings are now compulsory on public transport. At Asda, you can get a 4-pack of Prima disposable face coverings for £2.80, or a 2-pack of washable face coverings from £2.50. Asda, we're all in this together. Selected stores subject to availability.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio alongside Tom Keene, together with Lisa Bravitz. I'm Jonathan Ferro. Your claims data about to drop across the Bloomberg terminal with futures up just 4 or 5 points on the S&P 500. We are firmer by a little more than 0.1%. What I'll do is I'll break the numbers. I'll tell you what the median estimate was and what the revisions may well be as well. We're waiting for those numbers to cross. As we do wait, your median estimate going into this claims data, 1.375 million is what the street is looking for the week, the period ending July 4th. For continuing claims, we're looking for something in and around 18.8 million. That would be a drop down from the previous month of 19.29 million the previous month. So we're looking for some improvement, and here it is. The actual jobless claims figure comes in at 1.314 million against the median estimate of 1.375, so slightly better. A little bit of improvement there. Continuing claims drops to 18.062 million against a previous read of 19.29 million. Still waiting for the revisions, guys. But Tom, it's the improvement that we were looking for on both jobless claims and continuing claims as well. Though I'll stress, let's use the phrase less bad. It's less bad. It's still not great.
Yeah, absolutely. And I actually looked, John, today. It was the first chart I looked at this morning is one that we look at, the smoothed 4-week moving average of that single 1-week jobless claims. And you're right, John, it's a fading and smooth recovery, but clearly not fast enough for the politicians, including Joe Biden speaking in Scranton, Pennsylvania today. John, right now, do you see a market reaction there to what seemed to be a little bit better numbers?
A little bit higher. Revision for the previous month coming in a little bit as well on continuing claims, Tom. That was 19.29. That comes down to 18.76. So a little bit better last month, a little bit better this month, or rather this week, Tom. Right. So this week compared to last week, things getting a little bit better. But I should stress, Tom, continuing claims going back to June 27th. This initial jobless claims read goes back to July 4th. There is a feeling amongst many people that coming out of June and into July, things have started to fade. We've lost a little bit of momentum. So this is as good as we can get for the labour market in real time. But I think a lot of people look into the high-frequency data elsewhere, Tom, mobility data, restaurant bookings, and drawing the conclusion the momentum that we had going into June, coming out of it, is a little bit different.
And certainly you see it within the pandemic with, of course, the announcement in New Jersey of the governor and masks and what we see down in Texas and, of course, very sadly in Florida as well. To give us perspective in the dynamic here and particularly to get to August, Michael Gapin joins from Barclays Capital. Michael, do you have any ability to forecast, estimate, judge August?
Right now, not a lot. I think that we would, as Jonathan said, give a little more credibility to some of these high-frequency mobility data as restaurant bookings. I, in particular, watched the Dallas Fed's Mobility and Engagement Index. The claims data just don't have as clear of a signal for all the reasons that you've discussed in recent weeks, including backlogs and processing. And we're in this very strange situation where the separation side of the labor market is still bad, but claims really only tell us about half the story. The other half has been a tremendous pickup in the hiring rate. So we're in this odd period where we can have a high level of claims, unusually extraordinarily high level of claims, but still have an improving labor market. So August, I think, is probably more about COVID cases, a willingness to move around still, not so much about what the labor market is saying today.
And what's so important in that insight, folks, is from Dr. Gapin, the idea of claims being a one-sided view. Can there be a one or two or even three-sided view of the distinction between furloughs and layoffs and firings?
In the short run, yes. Somewhere in the long run, no. And so there's this tension in labor markets, as you know, where the vast majority of people unemployed right now consider themselves temporarily unemployed. But as we've seen, even though the labor market has been improving and the number of unemployed has come down, a greater share of those layoffs or unemployed are now starting to be booked as more permanent unemployment. So as this gets prolonged into August, September, and October, I think, no, there's that difference is just in name only, and we risk a temporary unemployed worker turning into a long-term unemployed worker, and that's the scarring that the Federal Reserve, of course, is trying to avoid.
And we're seeing that in the numbers, Michael, the churn beneath the surface. The net change is positive, but beneath the surface, we're starting to see permanent layoffs build again. We've had so many different companies in the last 24 hours announce job cuts, store closures. The worries about the second wave of layoffs, are we starting to see evidence of it?
Yes, absolutely. I think there's been a narrative that says that business models under pressure, retail is the most obvious case of this, that if firms were thinking of making major transformations over a 2 to 3 year horizon, that those would be brought forward. So COVID is accelerating some of those structural changes. And I think what you're seeing now is firms have had several months to assess the state of play. They're now making plans. And so we're getting some word and some releases that those plans include more layoffs. I think those are probably layoffs that are being brought forward relative to where plans would have stood in January and February.
Michael, some analysts and some traders would say economists are just being chicken little right now, and you're seeing this in the economic surprise index in the United States, which is surging to a record high as economists' projections come in too low again and again and again, and certainly today with the jobs report. Do you take that as a sign that economists are being too pessimistic and sort of accounting for a greater amount of permanent layoffs than the market really will sustain? Or do you view this as just how difficult it is to gauge a labor market in such dramatic flux?
Well, I'm 6'9", so I've never really been described as little. But the way that I look at this is yes, it is true that we've been surprised to the upside. But in my view, it's been mainly on the good side of the economy. The goods sector can rebound quickly. It has been the case that has happened. It's happened in the U.S. and globally. Spending by households on goods is only a little bit short of where it was in February. That's rebounded. From here, though, if the rest of the economy is going to recover and we're going to get continued upside surprises, it has to come out of services. So while the goods sector has recovered about half of the lost jobs that we saw in March and April, the service sector has only recovered about a third. So I think it's what we're seeing at the moment is the goods sector rebounding quickly. Economists are still thinking a little bit more longer term about, well, this is a service-oriented economy. It's roughly 70 to 80% of where the economy is going, and there's still a lot of after effects from COVID that could affect the services sector. So I think we're thinking a little more longer term, but we have to accept the fact that the near-term bounce has been stronger than we thought.
Lisa, rules of engagement. We insult the economists after the interview, not during the interview. Just save it, just for a couple more minutes. Michael, I do have a question for you, sir, about the recovery and when you expect it to flatten it out. Is this a story we should look for the back end of August, later this summer? Where are you focused on the calendar?
I think that's exactly right. It happened about 2 to 3 weeks quicker than we thought, and given the flows and the magnitudes that we're discussing, it's meant a lot of outperformance. And so therefore, I think you're seeing May and June and July are probably going to be pretty strong numbers. And then as you get into August and September, if we're still dealing with coronavirus outbreaks, increased hospitalizations, and backpedaling on phased reopenings, then you'd likely see a sloughing off, or at least a moderation in the rate of improvement from there. And that's why I think we and others are still calling on phase 4 stimulus as needed to help bridge the economy a little further into the year. So if we get the phase 4 stimulus, I think it'll help. Certainly, we would expect a larger sloughing off in activity if we don't. So it is a critical piece of the forecast, as well as what's happening underneath in terms of COVID and a willingness to rehire.
To be clear, John, I knew that Michael was very tall, so I knew he could handle being referred to in a profession of chicken littles, because that is sort of what some people are saying. So to be very clear, but Michael, I do want to get your sense when you talk about stimulus. Can you talk to our earlier conversation with Claudia Sahm about the most effective stimulus that we have seen thus far coming from the U.S. government?
I think it's been twofold. One, I mean, I'm going to include some Fed policy here as stimulus because it's just emergency liquidity provision. But I think the combination of the PPP, it came late and it needed to be remodified and it needed to be upsized. But I think we saw in May and June that it likely helped hold in a lot of employment. So I think the PPP at the end of the day has been fairly successful. And then I think on the other side of it, it's just tax rebate payments or rebate payments to households plus the unemployment benefits. So this is not traditional stimulus in the sense of households have a lot of income and we're trying to add something on top of that wasn't expected. This is about income replacement. And so I think I would say number one has been the income replacement on household balance sheets, and number two has been, getting some wage and salary support to small and medium business through the PPP. To me, those two have been the most important.
Michael, always great to catch up with you, sir. So my best to the team. Michael Capon there at Barclays, the chief U.S. economist. In this equity market, up 0.2%, positive 6 points on the S&P 500. Tom, just to reiterate the numbers again, the latest week's data better than the previous week's data, but huge caveat. To see claims still north of 1 million every single week, Tom, when we got so used to claims coming in at around 200K, every single week not so long ago, I think it just speaks to how far we are from normal.
I'm going to use my hand here, and for Bloomberg Radio, we'll have to use the old visual hand trick for Bloomberg Radio, which only works on surveillance. It's a exclusive surveillance thing. John, it's real simple. Unemployment rate high and has come in nicely. Jobless claims high and really hasn't come in all that nicely. I'd say 800,000. Maybe that's where you start smiling on claims. We're nowhere near that yet. And Joe Biden and Scranton will know that this morning.
And for our listeners on radio, Tom, I share their pain because I have no return monitor, so I can't see what on earth you're doing with your hands either.
Well,
I'm not sure for the most part. I want to know. Tom Keene with Lisa Abramovich and Jonathan Ferro.
Do you?
It's Bloomberg surveillance. I'm sure it works. No worries. Up 6 points on the S&P 500, up 0.2%. Later, the former Vice President Joe Biden addressing Scranton, Pennsylvania, addressing this nation on why he thinks he's best placed to lead this country through the economic recovery that could last well beyond 2021. More still to come right here on Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Michael Barr. Good morning, Michael.
Good morning, Tom. The CDC is revising guidelines for reopening schools after President Trump tweeted sharp criticism, calling the initial guidelines too tough and expensive. CDC Director Dr. Robert Redfield on ABC's Good Morning America was asked if it's appropriate to revise health guidelines protecting children in response to political pressure.
The purpose of those guidance is to help local jurisdictions open their schools. It's not a question of opening schools versus public health. My position is that the public health of the students of this nation is best served by getting these schools reopened.
New York Mayor Bill de Blasio says he anticipates a blended learning program for the city's 1.1 million students when the nation's largest public school system reopens.
Blended learning simply means at some points in the week, you're learning in person in the classroom. At other points in the week, you're learning remotely. And we all know remote learning is not perfect, but we've also seen a lot of kids benefit greatly from it during these last months. And we know we'll be able to do it even better in the months ahead.
De Blasio said masks and other PPE will be mandatory. Almost 13% of renters say they have no confidence in their ability to pay next month's rent because of the havoc caused to the economy from COVID-19. According to a U.S. Census Bureau survey conducted from June 25th to June 30th, an additional 20% only have slight confidence in making the payment. Joe Biden will begin rolling out his plan today on repairing the U.S. economy. Biden will give a speech today in Pennsylvania. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Many tenants across the country are facing possible eviction because of the pandemic. Eviction moratoriums in New York State and some cities, including San Francisco, Oakland, Los Angeles, others, are keeping some people off the streets for now. But Bloomberg's Prashant Gopal says it's not exactly a free ride for those tenants either.
Their credit is shot, and their ability to get another apartment goes down the drain. These debts are going to follow them for 2 decades, potentially.
And the moratoriums are tough on mom and pop landlords, too, because they still have to pay their property taxes, utilities, insurance, and other costs.
If these landlords get into trouble, they end up selling probably at distressed prices, or they go into foreclosure. And the larger players can take advantage of this. They can, because they can afford to wait this out. So they could buy these properties probably at low prices and expand their footprint, and you just get more concentrated ownership.
And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Imagine being denied an apartment because of your religion or your race, or because you have children or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Connecting decisions.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
What would the world be like if we listened more? At Honda, our ears are always open to new ideas. Oh, there's one now, knocking on our eardrum. What's that? What if we made a car with cameras instead of wing mirrors? A robot mower that knows when it's time to cut the grass. A self-balancing motorcycle. And what if by 2022, all of our mainstream cars were hybrid or electric? Great idea. Thanks, ears. Honda, the power of dreams.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
The economic recovery clearly bottomed. I think some good news in our view is that we bottomed a little bit, less down in the United States in terms of the economy. It didn't dip quite as much as we were fearing. But this reopening process is in train, but it is not clear to us at all how this reopening process is going to go.
Rob Waldner there of Invesco on the reopening process. It's been really difficult to understand the magnitude of the bounce, and many people have underestimated it, yet still, in the months to come, people think that a recovery will flatten out. One man who's been a whole lot more constructive, Tom Keene, has been Mike Wilson of Morgan Stanley. Looking forward to catching up with Mike on Bloomberg TV in about 42 minutes' time. That's coming up later, Tom.
For all of you on Global Wall Street, I really can't say enough the importance of this update from Mr. Wilson with John Farrow. I just can't say enough about the timeliness of that. Again, futures pretty much flat, pretty much as they've been daily. You wonder, do futures come on today and then the market open? Does the market come on today with tech moving upward? Right now, and without question, with the backdrop of Brooks Brothers yesterday and Sur La Table today, and who knows what tomorrow, bankruptcy is front and center, and there's a lot of hot air about it. UBS has cleared the hot air. Matthew Mish with a terrific essay analyzing bankruptcy dynamics and credit default dynamics as we move into Q3 and Q4. We're thrilled that Matt Mish could join us this morning from Chicago. Matthew, congratulations on a really adult report on this dynamic. I want to go to the revenue dynamic. Do companies get in trouble because of a lesser profit, or do they get in trouble because the revenue drifts away? Which is it?
Well, I think if you look at the Duke CFO survey, the Richmond Fed survey, I think the latest data point very clearly, revenue is the number one concern. It's revenue, it's the shape of the recovery in the economy, and then third is, interestingly, cash flow and liquidity. So I think that's the answer we would give. Revenue is critical. And for some companies, on average, you're seeing 15 to 20% down for this year. For a small sliver of companies, about 10%, they expect revenues to be down as much as 50% this year. So there's only so much, obviously, you can do with margins. And on the bottom line, when you're seeing those type of declines in the top line.
Yeah, and Matt, certainly we've seen that with certainly retail bankruptcies reaching a record high in the first half. We're also seeing a big degree of bankruptcies in the healthcare sector as well as consumer discretionary more broadly. There is a tension in markets with narratives about free money, the Federal Reserve pumping liquidity into the system to lower borrowing costs, and then a lack of revenue leading an increasing number of companies into bankruptcy. How much has the Fed's liquidity staved off bankruptcy permanently and sort of stalled out this cycle that we're seeing in bankruptcies?
Yeah, it certainly helped. I don't think it's fully solved the issue. What you're obviously alluding to is the liquidity versus solvency debate, which is probably one of the biggest debates that we have with clients. I think, if you look at our model, there's three kind of key inputs, and they're diverging. The first is liquidity. That's measured by basically CP and short-term funding rates, and the Fed has obviously gone to great lengths to try and collapse those rates and increase funding in the banking sector. The second is lending standards, and what you've seen is the Fed, despite the Fed loan programs not really having significant uptake, as we talked about previously, they've been able to provide confidence to the market, and they've allowed investors to rebalance portfolios and provide liquidity and financing to companies. The piece that is going the other direction is leverage, and that's obviously a function, as we talked about top-line revenue weakness, and at the end of the day, the increase in leverage is driven by lower earnings. And, we were at record levels of leverage going into the COVID-19 crisis. Now that those numbers are going to clearly push up in Q2, as we'll see in a few weeks in Q3, and the big debate is, which is going to win? And I think from our side, The short answer is, it's mixed. The Fed has definitely helped, but they can't solve all ills. And in particular, some of the bankruptcies that you've alluded to recently, I think Brooks Brothers is a good example. Obviously, retail has been pre-COVID under structural pressure. COVID and the introduction, obviously, of work from home puts, a significant hurt on business models like that. And I think the other underlying story here is really what you've seen from, Fed speakers recently, which is the concern and the default and bankruptcy side around the size of firms, right? With small firms, SMEs, really being much more an area of concern because it's harder to get liquidity into the system and get it into the cracks and help small businesses the way you can help large mega cap companies.
Matt, one thing that's so great about your research is you do these surveys where you talk to CFOs across the spectrum of different companies. What have you learned in terms of where we are in the bankruptcy cycle? In other words, where do you weigh in on that debate in terms of how many more bankruptcies we're going to see over the remaining 6 months of the year? 4 months, 5 months? Where are we? July. That's right.
Yeah, so let me be very clear. So we have trailing U.S. speculative grade corporate default rates at 5.3%. Our view is we see that rising to about 9% close to year end. We haven't really moved that target in the last month or two. And then I think the big debate is increasingly on what the curvature of the default outlook looks like for 2021. We have rates that are moderating early next year through the first half towards 7%. And we essentially think the market right now is pricing at about 5.5% to 6% default rates. So we are above the market. We think the market is too optimistic, but it's not night and day. I think from the survey side, I would just give you the most interesting data point we got in our recent CFO survey was, again, the Fed is working to improve lending standards. The fiscal programs, like a prior speaker talked about, the PPP loan programs, Main Street lending facilities, those are a step in the right direction to provide companies with liquidity, a bridge essentially to a recovery, and you see that in the underlying data. Having said that, even though companies feel like there's a lot of support from the government with loan programs and lending standards aren't tightening nearly as much as we feared, we have 18% and 25% of firms that noted they were very or somewhat likely to miss a loan payment over the next 12 months. So I think the bottom line is liquidity is helping at the margin, but solvency concerns are still front and center. And I think it's really going to be in the small businesses where you see that. So in the next few weeks, what we're really watching is really the leverage loan firms, those smaller firms and middle market firms, because that's really where we've seen initial indications that there's stress that is not really being relieved by the Fed. And that's where we think default rates really could pick up aggressively. So if we're wrong and we're not negative enough, that's really the area of the market that we're looking at in terms of the reports that are coming in the next few weeks.
Matthew Mish, thank you so much. I really can't say enough about the detail of this report, folks. Again, we protect the copyright of all of our guests. You need to go to UBS to get this important report by Matthew Mish and his team. To sum up here for the hour, jobless claims, yeah, they're a little bit better, but it's really fractional. I do see a little bit of a bid to equities across SPX and particularly NASDAQ 100, the tech index, up again another stunning 0.6%. So we see that as well. I would watch bonds, and I would particularly watch our coverage across Bloomberg Radio and Bloomberg Television today of the speech of Joe Biden, that in Scranton, Pennsylvania. Please stay with us through the day. This is Bloomberg.
Why do hedge funds and other...
So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't. And I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones. And you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
Nissan's Sunderland factory is building cars again, and we're ready to get Britain moving. That's why this summer selected Nissan models come with a 3-month payment holiday, plus free roadside assistance, all at only 0% APR representative. We've built the cars, we've built the offers. Now it's time to get you back in the driving seat. See how we can help you at nissan.co.uk/payment holiday. And together, let's move beyond. PCP Nissan Finance. Order and register by 30th September 2020. Participating dealers only. Nissan. Innovation that excites. Make sure you don't miss out by visiting Westway Nissan.
Formula One is back.
F1 is back on Sky Sports.
It's lights out, and away we go.
And there's never been a season like this before.
How was that fast?
No one knows where this road leads, but it's going to be a hell of a ride.
Davy and Son, oh, he comes down into each other.
Are you ready?
Brilliant madness. An absolutely perfect race.
Watch every race live. Upgrade to Sky Sports F1 today. Go to sky.com/F1 for details.
Wondering what to play next? Want to know what other TuneIn listeners are listening to right now? Head to the trending section under Browse to explore the most popular stations and podcasts on TuneIn today. Millions of listeners like you can't be wrong.
We're all guilty of spending too much time on social media. Why not add something genuinely useful to your feed with TuneIn? Follow @TuneIn on Facebook, Twitter, and Instagram to learn about some of the best stuff happening around the app. You might just discover your next audio obsession.
Next time on the New Yorker Radio Hour, Kenan Thompson. He's the longest-running cast member ever on Saturday Night Live, and it took him years to feel like he belonged.
It just never seemed real for so long. Like, I had such a hard time even associating myself being on the show for a long time. Like, I wouldn't watch, you know what I'm saying, just because... Really? I felt like I was ruining it.
Kenan Thompson joins us next time on the New Yorker Radio Hour. Listen to this episode on TuneIn today.
Ready for some straight talk on what's happening in the MLB? On the Barstool Sports Podcast starting 9, Dallas Braden and Jared Carrabis cut through the BS to break down the league the way they really see it.
Yeah, we're continuing our little mini-series of college baseball coaches in addition to bringing you major league players from throughout the league. If you've been listening to Starting 9 for some time now, you know that we've had a big leaguer on every single episode for probably 2 years now.
Search Starting 9 on TuneIn to listen.
Time. We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
A lot of us are still in a bit of a guessing game, trying to determine how severe the downturn will be. The only thing that can bring an end to the crisis is containing the disease.
Finance.
We are the one country where people depend on employment for health insurance in the middle of a health crisis.
Investment.
Real yield is a scarce asset these days. It's just unknowable, of course, where things are going.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from New York City and points beyond to our worldwide audience. Jobless claims, they fell last week by more than forecast, even as some large states reported a pickup in coronavirus cases. Continuing claims also came in better than expected. Equity futures are mixed this morning on that jobs data. We'll get to that in a moment. The dollar continues to pull back versus major currencies. The 10-year yield comes in slightly, while WTI crude remains steady at above $40 a barrel. Gold takes a pause at more than $1,800 per ounce. To get the latest on those equity markets, futures, let's check in with Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at this morning?
Well, one stock that jumps out in early trading, Paul, is Walgreens Boots Alliance. It's down 5.5%. The pharmacy owners' adjusted earnings for the fiscal third quarter were well below analysts' average estimate in a Bloomberg survey. Walgreens had a net loss for the quarter after taking $2 billion in charges on its UK business. The company's cutting 4,000 jobs and suspending stock buybacks. Costco Wholesale, on the other hand, up 1.5%. The Warehouse Club chain sales last month climbed 11.5% at stores open more than a year. U.S. sales of items other than fuel jumped more than 13.5%. Both of those increases beat projections. Microsoft's up 1.5%. Wedbush raised its 12-month share price estimate for the software maker by 18% to $260. The new projection is the highest among 31 analysts in a Bloomberg survey. NVIDIA is up 1.5%. The chip maker is poised to widen its market value lead over Intel after moving ahead yesterday for the first time ever. Now, NVIDIA was valued at $251.3 billion at the close. Intel was at $248.2 billion. Intel shares moving just a bit higher, up 0.5%, not keeping pace with NVIDIA, though. Cisco Systems up 2%. The networking equipment maker was raised to buy from hold at Morgan Stanley. The firm said Cisco's shares are relatively cheap and the company's earnings potential is underappreciated. And Autodesk up 3%. The design software maker was raised the equivalent of buy from hold at Oppenheimer. The firm said a 12-month share price estimate of $300. That's the highest of 21 analysts in a Bloomberg survey. Carnival's up 4%. The cruise line owner's German unit AIDA will resume sailing next month. Now, the first voyages will restrict the number of passengers and won't stop at another port, among other changes designed to respond to the coronavirus. And Carnival's peers are higher, too. Royal Caribbean up 2%, Norwegian up 2% as well. Bed Bath & Beyond, though, down 8.5%. The home furnishings retailer plans to close about 20% of its stores during the next 2 years. That's roughly 200 locations. It's all about trying to cut costs as a result of the business slumping in the coronavirus era.
Yeah, that's what we hear a lot about that, Dave, in the world of retail. Just too many stores in the United States, particularly department stores. So you hear these big department store chains talking about, just closing down stores across the board, and that's generally what investors want to hear, I think.
Yeah, absolutely. I mean, Bed Bath & Beyond sort of in that same category because they're all about the superstores, thousands of items. And, they've had their challenges, management changes, you name it. They're trying to turn around the business as posed issues. Let's put it that way.
Absolutely. Bloomberg Stocks editor Dave Wilson, thanks so much for joining us. We'll chat with you in the next hour as well. Looking at those jobless claims numbers, stubbornly high, you could say, but they did come in better than expected. Let's get some details with our good friend Vinny Del Giudice from Bloomberg News. Vinny, what did you take out of those numbers?
Well, Paul, claims totaling 1.3 million last week, still an unprecedented showing, but as you point out, lower than the prior week, lower by 99,000. And this is even with COVID-19 intensifying in some regions. But let's look at the big picture. Claims have been running in the millions since mid-March. It's really depression-like data reflecting the harsh economic impact of the pandemic. And Paul, for now, though, the positive news, although these are painful numbers, the trend is indeed edging lower.
Yeah, it's interesting, Vinny, because we saw these numbers this week, again, a little bit better than what economists had been forecasting. But you take a look at where we're seeing some of the flare-ups, Vinny, some really big states, some big economies, California, particularly Southern California, Texas, Florida, some of the bigger states out there really seeing some surge in COVID cases. You got to think that's going to be a challenge for the jobs numbers going forward.
It is, Paul, and you have to remember the states are fighting backlogs with all this paperwork, all these filings, so the numbers may not provide a clear snapshot for a few more weeks. Also, mind you, you've got some major employers like United Airlines. The airlines, they're warning of job cuts as well. So tough times ahead. The trend is lower, but gosh, the level just horrible, horrific.
It really is, and I think the concern, as you mentioned, Vinny, some of these big corporations are starting to feel the pain. Initially, we saw it in, some smaller businesses, restaurants, leisure, those types of industries that got hurt first and foremost. But now you're starting to see some bigger corporations like United Airlines, as you mentioned, talk about laying off significant numbers, and so it just seems like we are far away from being out of the woods here as it relates to the labor market.
Yes, Federal Reserve officials have been warning of that, and the big companies, definitely a problem. They're tightening their belts, but also the small companies. Let's not forget them. The major employers, really the backbone of the U.S. economy. Yep. A lot of them struggling, and that's bound to continue, Paul.
Vinny Del Giudice, thank you so much. We appreciate Vinny's Bloomberg News and giving us the latest on the jobs numbers, Tom. And so, again, I think there's a couple ways you can look at the jobs numbers, the jobless claims numbers, Tom. Again, stubbornly high on the downside, but a little bit better than expected. The trend seems to be, positive, but you got to wonder about this trend in jobless claims, given some of these big states that are seeing a surge in COVID cases.
There's no question about that. Michael Gapin of Barclays just with us, Paul Sweeney, and he made very clear this shift to a more pandemic analysis of the labor economy as we slam into the data for this July, and very few people actually talking with any kind of forecast certitude about August as well. We welcome all of you on Bloomberg Radio and, of course, Bloomberg Surveillance. Brought to you by Cohn Resnick Advisory Assurance Tax. Are you applying for PPP loan forgiveness? Don't leave money on the table or fail an SBA review. Visit CohnResnick.com /loan forgiveness. Cohn Resnick, CohnReznick, CohnResnick.com /loan forgiveness. Paul, what I find absolutely fascinating is the linkage and almost slow but persistent drip of layoff announcements, cuts, however you want to phrase it, and also sort of, Paul, and I say this with humor, but there's nothing funny about the announcements that we're getting, which are literally the daily bankruptcy. I mean, there's just nothing funny about that.
No, there isn't, and the Brooks Brothers news for a lot of our listeners hit close to home, Tom, kind of being the kind of one of the key components of the Wall Street culture, getting your suit from Brooks Brothers and so on. So, the retailers are feeling it, certainly, Tom. We've seen a lot of Neiman Marcus, Brooks Brothers, others dealing with it. But yet, unfortunately, it's likely that we're going to see that expand into other sectors and industry verticals as well.
In Sur La Table this morning, the retail kitchen store that, Paul, I darken the door every day. I was telling John Farrell that I have an Italian pasta maker there on order, and I'll have to see how that works out. You should see me, Paul, trying to make pasta in my kitchen. I'm like 0 for 6.
Don't you just boil water?
Have you been able ever to make decent pasta at home in your kitchen?
Well, I just boil water and drop it in there and hope for the best,